Very good morning, everyone. How are you all? Very fine. Okay. So first, any doubt of any MCQs, etc. Then we'll start business combination chapter. Bada. One doubt came for India's 37. Question number 14. Which one of the following is correct statement in relation to provision and contingencies? So an item of a contingent nature may be recognized but not disclosed. This is not correct. India's 37 applies to provision to perform land rehabilitation activity. So of course it is applicable to perform land rehabilitation activity if there is some legal or constructive obligation. So this is only correct, but then also read all the points. However, this is only correct. India's 37 applies to contingent liabilities and contingent asset of insurance, not applicable. It is scoped out. Insurance company obligation is scoped out. A present obligation exists in all circumstances where a company may have some choice in whether or not to make future sacrifice of economic activity. What is it? A present obligation exists in all circumstances where a company may have some choice in whether or not to make future sacrifice of economic benefit. So obligation exists only when there is a what, some future outflow of resource. So this is also not correct. So point number 2, option number 2 is correct. The answer was not given because of that reason. Somebody asked the confirmation ki what is the answer. So answer number 2 is correct. This was a confirmation doubt. Okay. Any doubt you have? Bolo. Any doubt you have? Can we start then? Business combination. You are not asking doubt means last day also you have not done any study. Doubt hai? So after asking, sir, bolna rahi. You can, whether I will see you, then you ask me. Haan re? Okay, CFS na. So come to CFS chapter. Well, doubt number 9, 1 by 1. 9. I'll forget. Question 9. Come to question 9. X Limited acquired 20% shares of B Limited on 1/4/2001. X Limited further acquired on 1/4/2001 21. So they acquired 20% shares on 1/4/2021. X Limited further acquired on the same date on 1/4/2021 only 60% shares of B Limited at a consideration of 3,60,000 in cash and by issue of 10,000 shares of rupees 10 each, market price 50 rupees. This is the only doubt. The date is the doubt. I think date में थोड़ा सा doubt है. Let me read the entire question. The debentures of B Limited are exchanged for 12% debentures of X Limited. A contingent consideration is also payable. The fair value of each is 60,000. X Limited pays transaction cost of 20,000. NCI is at fair value. The fair value of assets and liability are given. The abstract of the consolidated balance sheet of X Limited and the individual balance sheet of B Limited on 31st March 2002 means 2022. This is 2022. Okay. So I think this will be 1/4/2022. This will be 1/4/2022 is given below. So they have given the balance sheet. Choose the correct alternative. Identify the net asset at fair value. You need to find out net asset at fair value. That is so easy. What is the net asset? They have given 3 lakh. So this become 3 lakh. This become 4,20,000. And the liability is what? The liability is what? 38,000. And there is what? 12% debenture also. So they have given debentures are carried at same value. So 3 plus 4.2 minus 38 minus 10, how much? Bolo. How much it is coming? Bolo. 6. This is correct. Answer is also given this only. Purchase consideration. Purchase consideration will be what? They have said 60% of shares has been acquired for a cash consideration of 3,60,000. So 3,60,000 is what? Cash consideration. And by issue of 10,000 shares at rupees 15, that become 1,50,000. Then they have given a contingent consideration of how much? 60,000. That will be also added. ये तीनों का total कितना हुआ? 5 lakh 70. So this is only the option given. Non-current NCI. So NCI initially they acquired 20, then 60, 80. So 20%. So how many shares are there? 25,000. So 25,000 into 20%, how much? 5,000. They have given the market price of shares. So market price is given. How much? Where it is given? It is given. Where is the market? This is the market price of which company? This is the X Limited, na? We want market price of share, so we need to do proportionate calculation. Now, whenever they have not given market price of shares of which company, B Limited is not given. So in that case, you don't have any other option. They have said fair value. So what was the purchase consideration? 7 lakh, 5 lakh, 70,000. This is for how much percentage? 60%. This was for how much percentage? 60%. So you do 20 by 60. How much? 1,90,000. What is the option given? What is the option given? Arey bhai, what is the correct option given? I'm asking you. You don't have the answer. 3 ka B. And what is our answer? 3 ka B only. अच्छा, this is the fair value previous. चलो दोनों का ऑप्शन एक ही होगा. Fair value because this is also 20%. This is also 20% ना. It is 3 ka B and 4 ka B. Understood? This you understood na. 3 first this you understood. This you understood. So one lesson to you. Whenever market price of shares of subsidiary company not given. So and they have asked you fair value only. So this is the only option to calculate. However, this is practically not correct. This is practically not correct. Practically not correct. Theoretically correct. Understood this point? So whenever market price of shares is not given, this is the way. If you have done mistake, यहाँ पर write on MRQ. Must revise question. What? Goodwill. What is your doubt? Which one was your doubt? Fifth में doubt है. अरे भाई. तो बता PC given how much? 5 lakh. Fair value previously held equity interest, and then this is also what? 1,90,000. Total is how much? 9,50,000. What is the fair value of INA? How much we calculate fair value of INA? 6,72,000. They have not given rate of tax now. Rate of tax given, then we need to also calculate deferred tax. They have not given. What is the goodwill? 2 lakh. What is the option given? 5 का B. 5 का B is correct. इसको correct कर लो. 5 का B. It is given यहाँ पर. Then doubt why doubt is coming. Hint में तो सही दिया हुआ है ना. In hint it is given correct ना. तो doubt should not be there ना. अरे sir, there some typo mistake ना. Ignore typo mistake. Okay. Okay sir. Revaluation profit on previously held equity interest. So, but what is the fair value? 1,90,000. What was the carrying amount? Carrying amount will come in the balance sheet. So 2 lakh. 2 lakh is the carrying amount. So what is the loss? Loss is what? Loss. Loss is how much? 10,000 negative. This is correct. Then consolidated other equity at acquisition. So we need to find out our consolidated other equity at acquisition date. On the date of acquisition, na. So that is so. Other equity will what? It is 2,70,000 only. Other equity will be 2,70,000 only na. What is the option given? On the date of acquisition they are asking na. Acha, there is a gain also, sorry. So 2,70,000 on the date of acquisition there is a loss. So 10,000 loss is there. Then what happened? और तो कुछ नहीं है. What they have given? अच्छा, they have added premium also. चलो ठीक है. Premium तो इसके लिए you need to pass one journal entry and then see. It will come same only. Means you need to pass one journal entry and securities premium will come, everything will come. Then you just to add, it will come to 2,90,000. Investment in separate balance sheet. To separate balance sheet they have asked investment. So they initially it was how much? 2 lakh. And then they purchase at what? What is the purchase consideration? It is 2 lakh plus purchase consideration. What was the purchase consideration? 5,70,000. So add kar the 5,70,000. This is coming how much? 7,70,000. क्यों कर दिया? अच्छा, there is one debenture also they have acquired. We need to pass journal entry for that. So previously held equity in the cost consideration is what? In debenture. Okay. 5,70,000 plus 10. So minus 20,000 why they have done? Minus 20,000 why they have done? Acha, I have not read it. Valued under equity method. Acha, this is they have given at equity method. Okay, sir. So valued under equity method with share of cost. So can this 20,000 will not be in separate financial statement? So 2 lakh minus 20,000 will be the cost price. So 1,80,000 is the cost price. Correct? So 1,80,000 plus PC, and then they have acquired one debenture that will be also investment debenture. So that 10,000 will come. Good question. This is a good question. A very good question, I will say. So that will come 7 lakh. How much it is coming? It is 7,60,000. 7,60,000 will come. Good question. Okay. Any more doubt? Let me mark you in this. Good question. They have asked everything in this. Also provide following solution of example on page 363, 378 of India's Saaransh book, volume 2, and in chart on page 369 if the conditions are not met. Register. What is the chapter? Chapter name bata. Apart from this, 20, 29. To come to 29. B Limited acquired 30% interest in D Limited and achieved significant influence. The cost is 2,50,000. The associate has a net asset of 5 lakh at the date of acquisition. The fair value of this net asset is 6 lakh. As the fair value of PP was 1 lakh, so carrying amount was 5 lakh. The fair value is 2 lakh, 6 lakh. So first, can you give me goodwill? So 2,50,000 is the cost price. 6 lakh, 30% how much? 2 lakh. How much? 1,80,000. So what is the goodwill? 70,000 is the goodwill. So this goodwill will be recognized or will not be recognized? Will not be recognized. So they have asked calculate value of goodwill to be recognized in CFS. Answer is 0. To be recognized will be 0 na. And then they have calculate the value of goodwill to be disclosed. Disclosed will be what? 70,000. Dangerous na? Dangerous. Understood this too fine? Correct. Out of this one question they will ask. So if they have said recognize will be 0. Disclose will be what? 70,000. In this to 100% you will do mistake. This was the only doubt. ए भी डाउट है, ए कर लो। तो बताओ व्हाट इज द कॉस्ट प्राइस 2,50,000। देन व्हाट इज द प्रॉफिट, प्रॉफिट इज 1 lakh, 1 lakh का 30,000 will add। then they have given dividend 9,000, 2,700 will deduct, dividend received will be deducted, and then there is a exchange loss of 20,000 in OCI, so 20,000 का 30%, 6,000 will be added, and there is one fair value additional depreciation, you can see 1 lakh, what is the life 10 year, तो 10,000, 10,000 का 3,000 माइनस कर दो, 3,000 माइनस कर दो, what is the answer coming, बताओ how much, 2 lakh, 2,80,000, 2,50,000 प्लस 30,000, अच्छा OCI लॉस है, इसको माइनस कर दो, माइनस 2,700 माइनस 6,000 माइनस 3,000, 2,68,300 आ गया। What was the mistake you are doing? अरे I am not reading, you तो read ना, exchange gain or loss, I am तो reading very fast, ठीक है, okay, मतलब what mistake I am doing, you are also doing that mistake, both are same, I become CA, you will also become CA, हाँ correct ना, हाँ पक्का for sure, इसलिए only we need to avoid, देखो normally what happen, if you can avoid small mistake, the probability of passing the exam will be high. The student, why they don't mistake, because why they do mistake, because of lack of concentration or lack of confidence. So ignore that, avoid that in exam hall. Most of you will become CA only if you avoid that, because I don't think so any CA final student who are not studying. Everyone is studying. Have you seen any CA final student who are not studying? You are studying or not studying? As per your capability you are studying na. As per your capability you are studying or not studying. Because if you are not studying, then to there is no question only na. Why you are asking that you will become CA? Then that question is only wrong. If you are not studying, अरे बोलना रे. So if you are not studying, that is not a valid question whether you will pass or you will not pass. But if you are studying and only you avoid this, only you try to overcome that, you should understand how to concentrate, and you should be very much confident about yourself that you are going to pass in exam. Only you need to do this now, correct? And if you are eliminating that 2 point, then there is a less chances of becoming CA. Conceptually everyone is good, you have done so much studies, so you are okay with that. Practice also you are doing, yes or no? Chalo, let us start business combination. New topic, I'll come to your point, whatever doubt you have asked, ठीक है ना, page number CFS at the end of the day. Okay sir, okay. So business combination, let us start business combination, once again important chapter. So from examination point of view, from ICAI examination point of view, this CFS and business combination is one chapter actually. Means out of these two, 25 marks question will be asked. Now from which chapter they are asking question, that ICAI only know. And there is no trend that last time they have asked consolidation or business combination whatever, so this time they will ask the reverse. ऐसा नहीं है. If you are going as per that trend, you are not a CA final student. Okay, so there is no trend. Do both the chapter, anytime, any type, any question can be asked in exam. Now when I am saying business combination, so what IND AS 103 says that, business combination is a transaction in which acquirer obtain control of the acquiree. So it means we need to understand control. When the control is obtained, and the date when the control is obtained is known as date of acquisition. So on the date of acquisition, IND AS 103 will be applicable, and we need to apply the accounting treatment as per IND AS 103. Now this control can be obtained two ways. This control can be obtained two ways, either by acquiring substantial equity shares of Enquiry. I'm not writing more than 50% because now you have understood that even though we are acquiring less than 50%, then also control can be obtained. Correct? So this is nothing but formation of what? Formation of subsidiary. So formation of subsidiary is one of the example of business combination that is already covered in which chapter? Consolidation chapter. Then or by acquiring business, directly the business of what? Enquiry. Acquiring the business of Enquiry. So when I say business, it can be either one or more business or all business. Either we acquire all business or one or more business, but not all business. I hope you are understanding. Correct now. So when I am saying all business, then in that case, can I say Enquiry company will be liquidated? Will be liquidated. So in that case, there are three types of restructuring. One is known as amalgamation. One is known as what? Amalgamation. Second is known as what? Absorption. Third is known as what? External reconstruction. External reconstruction. If you remember, AS14 used to cover only these three. AS14 in CA Inter used to cover only these three. So it means IND AS 103 has a wider scope. It will cover apart from what was the coverage of AS14. So when I am saying one or more business but not all business, it means Enquiry company is not liquidated. From examination point of view, the best example is what? From examination point of view, it will include demerger. However, it will also include any purchase of business also. Purchase of business, but not all business. Any business you have purchased from any company, but which is not a demerger. But from exam point of view, as if you see ICS study material, they have given only question of what? Demerger. So this is scope of what? IND AS 103. This is scope of IND AS 103. Correct? Now, what IND AS 103 says that whenever there is a transaction, correct. So first we need to find out whether that transaction is a business acquisition or it is an asset acquisition. Assets acquisition. Are you getting what I am saying? Means sometime what happens, we acquire a group of assets and liabilities, but which will not meet the definition of business. If it will not meet the definition of business, then IND AS 103 is not applicable. So in this case, you are acquiring group of assets and liability, but that do not constitute the definition of business, then it is not a business acquisition, that will be an asset acquisition. And for that, IND AS 103 is not applicable. IND AS 103 is not applicable. However, IND AS 103 has given guidance on such accounting treatment. So even though asset acquisition is there, means when you are acquiring group of assets and liability. For example, suppose you came to me and you purchased some furniture from me, a group of benches, a group of camera, a group of any other asset. So IND AS 16 is not applicable for that. IND AS 16 is silent about group acquisition. Then in that case, the guidance has been given by IND AS 103. So you can't say IND AS 16. You need to come to what IND AS 103, but you can't say IND AS 103 is applicable. Don't write down in exam as per IND AS 103. Write down a guidance has been given where? IND AS 103. Understood what I am saying? Correct. So guidance has been given, we'll do that. Means it is only applicable to what? Business acquisition. It is only applicable to what? Business acquisition. Now further they say that this business acquisition are of two types. One is business combination not under common control. Business combination not under common control. And one is business combination under what? Common control. So if it is business combination under common control, then also 103 is not applicable. Then also 103 is not applicable. For that, guidance has been given under Appendix C to IND AS 103. Appendix C to IND AS 103. And they have given one method known as pooling of interest method. Pooling of interest method. So if there is a business combination which is under common control, then also IND AS 103 is not applicable. Then what is applicable? Appendix C to IND AS 103 is applicable. Means only when business combination is not under common control. Means whenever we say business combination only, when we say only business combination, it means it is not under common control. So it is quite possible that whenever I am saying business combination, to assume that this is business combination not under common control. Understood? So can I say this for this 103 is applicable, and 103 say that we need to apply which method? Acquisition method. Which method? Acquisition method for the accounting treatment. Understood? Now further, for this method they say कि business combination can be of two types from accounting point of view. Acquisition method will be applicable. One is which is a reverse acquisition. Reverse acquisition. A reverse acquisition, and which is not a reverse acquisition. Not a reverse acquisition. However, they have used the term reverse acquisition, means balance are not a reverse acquisition. So whenever reverse acquisition is there, then also we apply IND AS 103 only, and the same method, acquisition method, will be applicable. Correct? But in the case of reverse acquisition, the accounting acquirer is not equal to what? Legal acquirer. Accounting acquirer is not equal to legal acquirer. I hope all this term you know. I'm just giving a revision. But in this case, can I say accounting acquirer is equal to what? Legal acquirer. Understood is fine. So this is the scope of this chapter. I hope with this thoda understanding what we are actually going to do in this chapter. Correct? So this becomes the entire scope of the chapter, what we are going to study. So let us start with the definition only. Once you have understood this, so can you see the transaction in which acquirer control the business of acquiring? Control the business of acquiring. Who is the acquirer? Acquirer is the entity which obtain control of the business of another entity, and this acquirer from the chapter point of view will be accounting acquirer or legal acquirer. So whenever we say acquirer means what? Accounting acquirer, which may or may not be equal to legal acquirer. So this chapter is not applicable to legal acquirer. This chapter is applicable to accounting acquirer. What is the meaning of control? Control, the meaning will be as same as what we have done under IND AS 110. So IND AS 103 has not defined the term control. The control definition is given under IND AS 110. Now who is the acquirer? Acquirer is the entity whose business has been acquired by the acquirer. Once again, whenever we say acquirer means what? Accounting acquirer. Now what is the meaning of business? What is the meaning of business? The business means what? An integrated set of activities and asset. An integrated set of activities and asset that is capable of being conducted and managed. That is capable of being conducted and managed for the purpose of providing goods or services to the customer, or generating investment income, or generating any other income from ordinary activities. Means simple word can I say, which for the purpose of generating revenue. For the purpose of generating revenue. Correct? Means can I say in any business there must be some input, and there must be some process. and when the process is applied on the input, there must be some input. Input means what? Can I say it is a group of assets, intangible asset and tangible asset, and there must be some process. So when process is applied in the input, they are capable of generating what? Output. So output become what? Output become what? Revenue. So that must be capable of generating. That must be capable of generating. Means can I say on acquisition date, it is quite possible there is no output. Then also it will be considered as what? Business acquisition only. So there are three things. One is input, process, and when process applied on input, there must be capability of, yeah, ability to generate output. Then it become what? Business. Correct now. It means, can I say, for this chapter, the first we need to analyze whether the group of assets and liability, whatever has been acquired, whether it constitute a business or not. For that, a detailed discussion has been given by what? Ind AS 103, how to identify business, how to identify the business. That is also important from exam point of view, but till now no question of that nature have been asked in exam. How to do some question on what? They have not given any question for identification of what business. So this point I will come back at the end. How to identify the business. Can I say whenever question come for business combination accounting, it means it is understood that will be what? Satisfying the definition of business. So till they ask that type of question is not important from exam point of view. So I'll come back to this point at the end of the chapter. But one thing you have understood that this chapter is not applicable for what? Asset acquisition. This chapter is not applicable for asset acquisition. So applicable to all business combination except what? Formation of joint arrangement. So formation of joint arrangement, Ind AS 111 is applicable, Ind AS 103 is not applicable. However, there is one special point for this that I will do at the end. Whenever there is joint operation, in that case also Ind AS 103 might be applicable. That will be the last point of this chapter. Last point of this chapter. And it is also not applicable to acquisition of an asset or group of asset that does not constitute a business. Now one doubt will come, so why it is an asset? So whenever we are acquiring only a single PP, then what is applicable? Ind AS 16. So just try to understand, whenever you are applying a single asset from an entity, then which chapter will be applicable? Ind AS 60 will not be applicable, then the guidance given under Ind AS 103 will be applicable. So if you are acquiring a single asset from what? Entity. Single asset from one entity. Are you getting? Means in that case actually you are acquiring not single asset, you are acquiring the shares of that company. For example, just try to understand what they want to say. For example, this is A Limited and this is B Limited. This is B Limited. Now B Limited has only one investment property of rupees 10 lakh. B Limited has only one investment property of rupees 10 lakh. And they have an equity share capital of rupees what? 10 lakh. Balance sheet tell it. Correct. Now B Limited want to sell what? Investment property. Now if they sell investment property directly to A Limited, then Ind AS 16 will be applicable. If they sell what? Investment property directly to what? A Limited, then Ind AS 16 will be applicable. But A Limited acquired what? 100% equity shares of what? B Limited. If they acquire 100% or 90% or 80%, whatever, because control is obtained now. So in this case, control is obtained over the entity. And can I say actually they are not acquiring shares, they are acquiring what? Investment property. Because can I say understood it will not constitute a business because it has only one asset. So to identify whether it is a business or not a business, we'll do the detailed discussion but at the end of the chapter. But suppose it is not a business, suppose it is not a business, so can you say Ind AS 16 will not be applicable, then the guidance given under Ind AS 103 will be applicable for the acquisition entry, for the asset acquisition entry. Therefore I hope you have understood why they have written single asset also. Acquisition of an asset or group of asset that does not constitute a business, that is it is an asset acquisition. So whenever there is an asset acquisition, then what is applicable? Ind AS 103 is not applicable. However, Ind AS 103 has given a guidance for the purpose of accounting treatment. So what they say that entire purchase consideration, whatever consideration you have paid will be allocated to all the asset whatever has been acquired identified asset whatever you have acquired in the ratio of their fair value, in the ratio of their fair value. In that case, no goodwill will be recognized because entire purchase consideration have been allocated to what? All the asset in the ratio of their fair value. Therefore, the question of recognition of goodwill will not arise, and if it is not a business acquisition, goodwill should not be recognized in the balance sheet. Means goodwill will only come in the balance sheet due to what? Business acquisition, not due to asset acquisition. So that is given. You can read. The accounting treatment is very simple. Understood? Correct. Then one clarification has been given. Can you say A Limited will in their CFS will recognize this investment property at purchase consideration and goodwill will not be recognized. Now the question is that of course IND AS 103 is not applicable. Of course IND AS 103 is not applicable, but whether this A Limited will prepare consolidated financial statement as per IND AS 110, as per IND AS 110. Understood the doubt? IND AS 103 is not applicable. IND AS 103 is not applicable on the date of acquisition. Now the question arises whether this A Limited will prepare consolidated financial statement at each reporting date as per IND AS 110. Well, yes, because control is there, and this is a subsidiary company and this is a parent company. The parent company will consolidate all their subsidiaries even though it was not a business acquisition, the one clarification has been given. Clarification is what? As per IND AS 110, an entity must consolidate all entity that it controls, either it constitute business acquisition or asset acquisition. Understood this point? Correct. Yes sir. So this is very simple, you can do it. Now let us come to the accounting treatment. Let us come to the acquisition method. First we'll do acquisition method, then we'll do appendix C to IND AS 103, that is pooling of interest method. Acquisition method means it is a business combination under common control or not under common control? Not under common control. So can you say whenever question is silent, what you should assume? Under common control or not under common control? Not under common control. So whenever question is silent, don't apply pooling of interest method. Understood? So they have given some step. First we need to identify what? Accounting acquirer. Correct? Understood? Then identify what? Date of acquisition. Then identify what? The fair value of consideration paid or transferred, means PC, calculate PC. Then can you say you need to recognize a measure INA at fair value. So we need to find out fair value, but fair value will be given in the question. Then measurement of NCI same method. What two method? Fair value method and proportionate share in INA method. Then last, recognition and measurement goodwill. Okay, same formula whatever we have done in consolidation chapter. So can you see the last point of this chapter is the first point of consolidation chapter. In the consolidation chapter, the first point is what? Calculation of goodwill or gain on bargain purchase. This consolidation chapter start from the business combination chapter only. Correct now. So in this the last point will be the calculation of goodwill or gain on bargain purchase. So first let us discuss about identification of accounting acquirer. Already we understood that accounting acquirer is the entity which obtain control over the business of another entity. So it can be either legal acquirer, it may not be the legal acquirer. Understood? So for that purpose, to understand whether the accounting acquirer and legal acquirer are same or whether accounting acquirer and legal acquirer are different, I have taken four example from examination point of view. So whenever question is silent, means question has not given any information about accounting acquirer and they have not given any indicator of what accounting acquirer, always will do in this way as I am doing right now. Correct now. So I have taken one example. Share capital of A Limited is 20,000 equity share rupees 10 each. Share capital of B Limited is 10,000 equity share rupees 10 each. Identify accounting acquirer in the following situation. A Limited absorbed B Limited and has agreed to allot 1 equity shares of A Limited for every 2 equity shares in B Limited to the equity shareholders of B Limited. So in this case, batao, can you say A Limited has equity is the legal acquirer? And they will allot equity shares to whom? To the owner of B Limited. So what is the number of shares? 10,000. 10,000 into what? What is swap ratio given? 1 by 2. It become how much? 5,000. And what is the equity shares already held by the owner of A Limited? It is given how much? 20,000. So what is the total number of shares of combined entity? 25,000. And then we'll find out the percentage of voting right, percentage of voting power. So 5,000 divided by 25, how much? 20%. This become what? 80%. So whenever the owner of any company is receiving the largest voting right, owner of any company who is receiving largest voting right in the combined entity, so it indicates that that company is what? Accounting acquirer. So in this case, A become what? Accounting acquirer, and accounting acquirer and legal acquirer are same, and therefore it is not a reverse acquisition. It is not a reverse acquisition. Understood? Simple. Similarly, the second example is given. A Limited absorbed the B Limited and has agreed to allot 3 equity shares of A Limited for every 1 equity shares held in the B Limited to the equity shareholders of B Limited. Similar question, but swap ratio has been changed. Correct now. So in this case, batao, what is the equity shares to the owner of B Limited? It is 10,000 into 3 by 1. 3 by 1. Be careful, huh? It becomes 30,000. And what is the equity shares held by the owner of A Limited? 20,000. The total number of shares of combined entity 50,000. So this becomes 30 divided by 50. How much? It becomes 60%. This becomes 40%. In this case, which owner is receiving largest portion of voting right? B Limited. So B Limited, it indicates that B Limited is what? Accounting acquirer. So in this case, legal acquirer and accounting acquirer are not same. Therefore, it is a case of what? Reverse acquisition. It is a case of reverse acquisition. What is step number 1? Identify accounting acquirer. Step number 1 is what? Identify accounting acquirer. So whenever question is given for this chapter, first step write down identify what? Accounting acquirer. Identify accounting acquirer. Understood? Then one more example I have taken. C Limited was formed to take over the business of A Limited and B Limited. C Limited agreed to allot equity shares to the owner of A Limited in the ratio 3:2 and to the owner of B Limited in the ratio of 1:2. So what actually happened? There were two companies, A Limited, B Limited. They joined together to form a new company. New company was formed. You only say whether new company can purchase any existing company. New company cannot purchase any existing company. Means the C Limited is only a vehicle which has been used, where one company, means either A Limited will acquire B Limited or B Limited will acquire what? A Limited. It means C Limited is nothing. Means C Limited is only a legal acquirer. But can you see, it cannot be a accounting acquirer, and it is not an accounting acquiree also. Means out of these two, one is accounting acquirer and one is accounting acquiree. So normally this is the case. Whenever a new company is formed, normally it is a case of what? Normally it is a case of what? Reverse acquisition, because new company cannot acquire any existing company. A new company cannot acquire a existing company. Correct? So in this case, but A Limited get how many equity shares? It is 20,000 into 3 by 2. That is how much? 30,000. And B, owner of B Limited got how much? 10,000 into 1 by 2 na? It is 5,000. The total become 35,000. So can you say, of course this entity is getting what? The owner of A Limited is getting largest portion of voting right. Therefore it indicates that A Limited is what? And B Limited is what? And C Limited is what? Only legal acquirer. So this chapter is not applicable to legal acquirer. So IND AS 103 will be applicable to A Limited, because A Limited become what? Accounting acquirer. It is a case of what? Reverse acquisition. Last example. C Limited, a newly formed company, acquired A Limited and B Limited, and consideration was paid in cash. C Limited was funded by a venture capitalist. So what they said, in this case A, B and C was formed, a new company was formed, but they acquired A Limited by payment of what? Cash. This was funded by venture capitalist. Now whenever purchase consideration is paid in cash, then what they say, the entity who is paying cash will be only accounting acquirer. even though it is a newly formed company, even though it is a newly formed company. So whenever C Limited was formed and the PC was paid in cash, it is not a reverse acquisition. C Limited is a legal acquirer as well as accounting acquirer. C Limited is a legal acquirer as well as accounting acquirer. I hope you have understood correct. So first step is what? Identify accounting acquirer. For that, IND AS 103 has given some guidance how to identify the accounting acquirer. Correct now. So from examination point of view, sometime in a question they will indicate some of the indicator. So they have given some indicator that you need to apply from examination point of view. But whenever the question is silent about indicator, then always do in the way whatever I have done right now, to identify who is accounting acquirer and who is not a accounting acquirer. Correct. So what are the indicator? If the acquisition is made through payment of cash or transfer of any other asset, then the entity who is paying cash or entity who is transferring any other asset will be what? Accounting acquirer. So doubt is not in this case. Doubt will come in the case when the PC is paid by issue of what? Equity instrument. So whenever purchase consideration is paid by issue of equity instrument, then doubt will come. So in that case, what they have said, key entity, these are the indicator, huh? These are indicator which should be applied together in one circumstances. So that will indicate who is what? Accounting acquirer. So what is the first indicator? Entity whose owner receive the largest portion of voting right in the combined entity. So I have applied this only. So whenever question is silent, apply indicator number 1 in exam. Whenever question is silent, apply indicator number 1 in exam from examination point of view. Practically you need to refer the facts and circumstances and apply all the indicator. Apply all the indicator. I hope you are understanding. Chalega. Second, entity whose single owner or organized group of owner hold the largest minority voting interest. Hold the largest minority voting interest in the combined entity. Means only one single owner is getting the largest portion of minority voting right. It indicates that the owner of that entity might get control over what? Combined entity. It indicate. It is quite possible some other indicator says no, this is not the indicator. So it indicate. This is the indication. Are you getting what I am saying? So what they are saying, entity whose single owner or organized group of owner hold the largest minority voting interest in the combined entity. And so for example, let us say AB join together to become AB, and both get 50%. Now doubt will come. But in this, what happened? A Limited, there is one Mr. A, who is getting 49%. Who is getting 49? Only one single owner is getting what? 49%. Means can the other owner become widely dispersed? Quite possible. So it indicates that this A Limited might become what? Accounting acquirer for whom? AB Limited. It indicates, I am saying, understood is fine, correct. Then this all point will depend upon the information given the question. This all point means this will be applied only when question specify this point. Otherwise we can't apply this point in exam hall. Chalega? Yes sir. The third point, what? Entity whose owner has a power to compose the governing body of combined entity. Entity whose owner has a power to compose. It means what? That become what? Controlling party. Simple. Entity whose previous management dominate the management of combined entity. So their previous management become the dominating party in the board of directors of what? Combined entity. This indicate that might be what? Accounting acquirer. Entity that pays premium over the pre-combination fair value of equity interest of other combined entity. So can you say whoever is paying premium, they will only acquire? Suppose your value is 10,000 and I am paying you 12,000, means I want to get interest over your company. Correct now. Therefore, I will pay more than what? Your value. It means what? That indicates that we want to acquire control over your entity. Last point, entity whose relative size means net worth, size is greater than other combining entity. So this indicates that always big company will acquire what? Small companies. Understood? I hope you have understood. This is theoretical point. The first point you have understood, identify what? Now from examination point of date of acquisition will be always given the question. Date of acquisition will be always given the question. Why date of acquisition relevant for this chapter? Because on the date of acquisition we calculate goodwill or gain on bargain purchase, and from the date of acquisition the total comprehensive income of acquirer will be included in the financial statement of acquirer. So this date become what important? This date become important. Now in MCQ they may ask a question, what is the date of acquisition? So normally what in Ind AS 103 say, the closing date will be what? The closing date will be the date of acquisition. Means when the transaction is closed, that date become what? Closing date, and that closing date will be what? Date of acquisition. Understood? So what do you mean by closing date? Closing date means what? The date when which acquirer obtain control of the acquirer is generally the date on which the acquirer legally transfer the consideration. Means all the consideration has been transferred. Acquire the assets and liability. Acquire the assets and liability has been assumed. Correct now. So that become the closing date. In simple word, the date when the transaction become closed, it become effective, that become what? Closing date. On that date it will be what? The date of acquisition. So closing date will be given the question, that date will become what? Date of acquisition. But sometime what Ind AS 103 say that even though there is a closing date, but the control can be obtained either before that date or after that date. So we need to see the facts and circumstances of each case. Sometime what happen, the closing date is there, but we need to take approval from some authority to do that transaction, and that approval is what? Mandatory, means that is substantive to make the transaction possible. So even though purchase consideration has been transferred, even though legally all the assets and liability acquired, but you need to take some approval from shareholders, etc. So that date will become what? Closing. Means that date will become the date of acquisition. Means you need to see the facts and circumstances of each case, which can be, means the acquirer might obtain control on a date that is either earlier or later than what? Closing date. So there are some questions given for this purpose in your ICS study material. So now that question can be asked in MCQ ways. So they will give you one case study. You need to find out which one is the date of acquisition. So from my point of view, this is important from MCQ point of view now. Correct. This is important from MCQ point of view. So of course they can ask this type of question. Now coming to purchase consideration. The purchase consideration, can I say, is the foundation for this chapter. If PC is wrong, then everything is wrong. So they will try to hit you with PC only. So because PC is wrong, so entire after that whatever you are doing, that is wrong. So you need to be very much careful about PC. So PC means what? Can I say PC means what? Any cash payment. Any cash payment by whom? By accounting acquirer to accounting acquiree. Correct? Any cash payment. It will also include the fair value of any asset transferred. Fair value of any asset transferred. Plus fair value of any liability incurred. Liability incurred means deferred consideration. Means the amount will not paid right now, amount will paid after some time. That become deferred consideration. So deferred consideration will be also added. Then it will also include fair value of contingent consideration. So contingent consideration will be also added. Then it will be also will add fair value of any equity shares issued. Fair value of any equity shares issued. So very simple. First is what? Cash payment plus deferred consideration plus contingent consideration plus equity shares issued. Correct? All are at what? Fair value. On which date? On the date of acquisition. On the date of acquisition. Okay, deferred consideration will be measured on the date of acquisition at present value. So of course they will give you information about discounting factor, and contingent consideration will calculate at what? Fair value, and this fair value will be given in the question. So fair value for contingent consideration will be always given in the question. Fair value of contingent consideration will be always given in the question. If not given, will assume nil. If suppose the fair value of contingent consideration is not given, assume nil. Don't calculate the fair value of contingent consideration, because fair value will be measured as per Ind AS 113. So that much information will not be given in exam to calculate that. Are you getting what I am saying? So if the fair value of contingent consideration is not given, what you will do? You will take nil. You will take nil. So it is fair value. This is not actual value. This is what? Fair value. On which date? On the date of acquisition, which will be based on the outcome, means which will be based on probability of that contingent consideration, whether that contingent consideration is probable or not probable, that will be based on that. So if not given, we'll assume what? nil. But के present value तो of course discounting factor will be given. Discounting factor will be given, so we can find out discounted amount and that will become present value. Can you say when I am saying equity shares issued, so first we need to find out number of equity shares to be issued multiplied by what? Fair value of equity shares of which company? Accounting acquirer. So it is number of equity shares to be issued multiplied by what? Fair value of equity shares of which company? Accounting acquired. So how to calculate number of equity shares to be issued? It is the number of equity shares which have been acquired. Yeah, number of equity shares of other company means accounting acquiring multiplied by what? Swap ratio. Multiplied by swap ratio. I hope this is very simple. You all know about this from amalgamation chapter CA inter. पूरा CA inter में यही किए हो. Understood? Yes sir. Then we'll also add fair value of original SBP award replaced. Fair value of original SBP award replaced. This I will explain with some other concept. So this point I require explanation. This will become total consideration, but there may be some consideration which is payable because of some transaction which is not a business combination transaction. For example, you acquire a company. But there is some amount payable due to some other transaction. Which is due to either pre-existing relationship or due to post-combination transaction. So what Ind AS 103 say that separate that consideration whether receivable or payable from total consideration and the balance amount will be what? PC for business combination. So we need to understand what is this adjustment required for separate transaction which is not a part of business combination transaction. So balance will become what? Purchase consideration for business combination. Till now no question of this nature has been given in ICAI study matter nor they have asked in exam. So it can be dangerous from examination point of view because if they have given, so that will be a new question. So be careful about that. Be careful about this separate transaction which is not a part of business combination transaction. Understood this point? Correct. Now first point, there are some point which we need to understand to calculate what? PC. You can see how many issues are given? 5, 6 points are given. So if you understood that 6 point, you will be able to understand how to calculate PC from examination point of view. Chalega. So first, separate transaction which is not a part of business combination transaction. So what they say? This separate transaction can be due to pre-combination relationship or post-combination transaction. Either it can be due to pre-combination relationship or it can be due to post-combination transaction. Correct now. Post-combination, just try to understand whenever you are doing negotiation with the directors for acquiring any entity. So it might happen the director is professionally skilled person and you need to retain the director for operations of that company. So you will try to retain the directors or not for 2 years, 3 years, 4 years, 5 years, 6 years. So for that purpose, you have agreed to pay some remuneration to that director for post-combination services. And PC agreed total cash payment you have decided to pay 100 lakh. Out of that, 20 lakh is related to what? Post-combination services. Quite possible. So you have paid entire payment 100 lakh, including 20 lakh, which is for what? Remuneration for post-combination services. Batao, what is PC? PC is 100 lakh or 20 lakh? 100 lakh or 20 lakh? PC is 100 lakh, 80 lakh. PC is what? 80 lakh. Understood? So this is what adjustment for transaction, which is not a business combination transaction. So this type of information will be given the question, then only you can apply. Correct now. This type of information they will give in the exam question ki this cash payment include payment for post combination services. So be careful about this point. Chalega. Sometime what happened? Suppose A Limited acquired B Limited, but before that acquisition there was a sale transaction, sale of goods, trading transaction, and because of that reason there was some receivable in the books of A Limited and payable in the books of B Limited. Suppose 10 lakh was receivable and 10 lakh was payable. and the total PC decided for business combination is 100 lakh. Total PC decided for business combination 100 lakh. So what A Limited say that we need to pay how much? 100 lakh, but we receive how much? 10 lakh. So we will pay only how much? So cash payment agreed is what? 90 lakh. So in question they will say cash payment is how much? 90 lakh. So this become PC, but okay, this is what? Adjusted amount. So your PC will be what? 90 lakh plus what? 10 lakh. So 100 lakh. So they will not give you PC 100 lakh. They will give you cash payment how much? 90 lakh, and they will inform you about this transaction as an additional information. So you need to understand this is a net amount. 90 lakh is a cash payment net amount. So your PC for business combination is what? 100 lakh, not 90 lakh. 100 lakh, not 90 lakh. Till now this type of question has not been given. One more case can be arised. Suppose the PC for business combination is 100 lakh. PC for business combination is 100 lakh. That is already agreed. Now B Limited require liquidation. Now whenever a company is liquidated, so there will be some liquidation expenses. We need to appoint liquidator. There are some legal fees need to pay. To there will be some liquidation expenses, and liquidation expense is 2 lakh. Liquidation expense 2 lakh. So B Limited demanded the 2 lakh from whom? B Limited demanded that 2 lakh from whom? A Limited, and A Limited agreed to pay that liquidation expenses. I hope you understood. And therefore they have paid what? 100 plus 2 lakh. What is the total cash payment? 102 lakh. So total cash payment is 102 lakh, but the PC for business combination will be 102 lakh, 100 lakh. So any payment done on behalf of what? Any payment done on behalf of what? B Limited will not be a part of purchase consideration. So any payment which is made on behalf of accounting Enquiry will not be a part of business combination purchase consideration, and therefore that is outside purchase consideration calculation. So adjustment is required. Understood? So I have given 3 examples. Any of these 3 examples can be asked. There can be n number of examples. There can be some other example also. I can give you many examples now. For example, one more example. For example, A Limited, B Limited. Correct now. Now A Limited absorb B Limited, but before business combination, B Limited filed a case against A Limited. B Limited filed a case against A Limited. Correct now. And so of course if B Limited filed a case against A Limited, so of course A Limited to apply Ind AS 37. So in their books of account they have already applied Ind AS 37. Now whether provision recognized or not recognized, that is depending upon Ind AS 37. But case there was some pre-existing relationship. Correct now. Understood now. So what they PC decided 100 lakh, and for this compensation they agreed that let us close this case, and A Limited compensated B Limited for this closure of the case. Quite possible. And they have paid extra what? 20 lakh for closing that legal case. So how much they are paying? 120 lakh. How much they are paying? 120 lakh. So what is the PC for business combination? 100 lakh. So this you can do only when information is given the question. If not given, it means PC is PC only. It is not, no adjustment required. Understood? I hope you have understood all the examples. So these are given in here. You can read it. Then direct cost of acquisition. Now there are some costs which is incurred by acquirer, which is directly related to acquisition. So what Ind AS 103 says that this cost of acquisition which is directly related to acquisition will not be included in PC. This will be charged to profit and loss account immediately as an expense on the date of acquisition. So any direct cost of acquisition incurred by accounting acquirer will not be included in PC. That will be charged to PL as an expense immediately. I hope this is very simple. But one example, one stamp duty. Now A Limited. Okay, na? He was knowing that I will take that example. This example I always take in my regular class because I know that one time pakka they will ask in exam. Pakka this question will be asked in exam. Till now not asked, but very beautiful point. Suppose A Limited acquired B Limited, and B Limited has a land, and the fair value of land is 100 lakh. Fair value of land is 100 lakh. Now as per Ind AS 103, all the assets and liability whatever has been acquired will be recognized at fair value. But this land was in the name of B Limited, need to be transferred in the name of A Limited. So can you say A limited need to pay some stamp duty also for the transfer of name as a stamp duty. This you all know buyer need to pay. So they have paid stamp duty of 20 lakh. Let us say 20 lakh. ठीक है ना? Let us say 20 lakh. Now this 20 lakh will be added to the land, or what will do? Understand what I am saying? So this will be added to the land, or it will be charged to profit and loss account. Charged to profit and loss account as an expense, because as per India 16, if you say India 16, this stamp duty will be added. Means if you are only acquiring land, as per India 16, this stamp duty will be added, because their initial recognition is done at what? Cost. But here initial recognition is done at fair value. So you can't change the fair value. So this stamp duty will not be added to land. This will be charged to profit and loss account as an expense. Special point will be pakka asked sometime. So that is given as this point here. One more special point is that any cost of issue of equity shares and other securities. Suppose whatever equity shares issued by accounting acquirer to the owner of accounting acquiry, there are some cost of issue. So that cost of issue is nothing but transaction cost. The transaction cost will not be charged to profit and loss account as an expense. The transaction cost will be accounted as per Ind AS 32. And as per Ind AS 32, the transaction cost will be deducted from equity or financial liability as the case may be. So transaction cost of equity will be deducted from equity. Transaction cost of liability will be deducted from liability. This is also one important point, can be asked in exam as per MCQ format. Now coming to contingent consideration, one thing we have understood that contingent consideration will be recognized at fair value on the date of acquisition. Now what Ind AS 103 says that this contingent consideration can be classified as financial liability or equity as per the requirement of Ind AS 32. As per the requirement of Ind AS 32. Can you say the contingent consideration, if the payment will be done in cash, then it will be financial liability. Means if the contingent consideration is payable in cash, then it is a financial liability. But if contingent consideration will be settled by entity's own equity instrument, so it can be financial liability, it can be equity instrument depending upon the fixed or variable number of equity shares. So if fixed number of equity shares, it will be accounted as what? Equity instrument. If variable number of equity shares, then financial liability. It's very important from exam point of view, very very important. So whenever it is fixed number of equity share, it will be classified as equity instrument, and whenever it is a variable number of equity share, then it will be what? Financial liability. Now as per the accounting of Ind AS 32, whenever fixed any measurement required, no subsequent measurement is required. But if it is financial liability, we do subsequent measurement either at fair value through PL or amortized cost, either at FBTPL or amortized cost. I hope you are understanding correct now. So my question to you is this contingent consideration which has been recognized at fair value on the date of acquisition, correct now, as on the date of acquisition, classified as financial liability, classified as financial liability. But you will follow amortized cost or FBTPL accounting. Are you getting what I am saying? One second. Contingent consideration which has been classified as equity instrument, can I say it will be equity instrument and then subsequent accounting, no subsequent measurement required. So no subsequent measurement required, no classification is there. But if it is financial liability as per Ind AS 109, it can be what? Either amortized cost or FBTPL. So but you will apply FBTPL or amortized cost. FBTPL or amortized cost. FBTPL or amortized cost. So it will be FBTPL as per the requirement of Ind AS 103. As per the requirement of Ind AS 103. So it will follow FBTPL, and any gain or loss will be transferred to what? Any gain or loss will be transferred to PL. Any gain or loss will be transferred to PL. So this point is very important. The contingent consideration classified as equity shall not be remeasured. Any subsequent settlement shall be accounted for within equity. But contingent consideration classified as financial liability shall be measured at fair value at each reporting date, and the changes in fair value shall be recognized in PL as per Ind AS 109. Chalega. Then there is one more point, contingent payment to the employee shareholders. Can you see the shareholders can be two type, employee shareholders or non-employee shareholders? Employees means the shareholder who is an employee also, and shareholders who are not employed. The actors are employed or non-employed? The actors are employed. Who is saying non-employed? How can you say non? Directors are employee. It will come under income under the in tax. It will be under the head salary or business profession. Director will get remuneration na. So for in ITR of director, it will be in which head? Income under the head salary, income under that business and profession. Now I don't know income tax act. There is some amendment or what in that. Nowadays तो it was income under the head salary. But income tax act is some other दुनिया छोड़ना भाई उसके बारे में क्यों बात करना. Directors are what? Employee. Director. It will under Ind AS 19 to be covered. Employee benefit expense. Ind AS 19 you have done. So directors are covered or not covered? Under Ind AS 19 directors are covered or not? Covered. Covered. They are covered. Huh? ठीक है. They are employee. How can you say they are not employee? चलो. Now consideration, directors and shareholders are two different things. Huh? So directors may be shareholders, but directors are what? Employee. Directors are employee. So can you say it can be either shareholders can be employee or shareholders can be non-employee. If they are non-employee shareholders, whatever payment done, that is a part of PC. Whatever payment done, that is a part of PC. So there is no doubt about non-employee shareholders. But this is an employee shareholder, then doubt will come whether the payment has been done in the capacity of employee or the payment has been done in the capacity of owner. PC means what? Payment done in the capacity of owner, not in the capacity of employee. So whenever payment is done to whom? Employee shareholder, doubt will come or not whether it is a part of PC or whether it is not a part of PC. So what they are saying, if the fixed payment has been done on the date of acquisition, fixed payment, then it is a part of PC. So whenever two employee shareholders fixed payment is done, it is always a part of PC. But if there is a contingent payment which is based on some future outcome, there is some contingent payment, then doubt will come. So what they are saying, if that contingent payment can be forfeited if employee terminate, if that contingent payment can be forfeited if employee terminate, but in the capacity of owner, in the capacity of employee, in the capacity of employee, therefore it is not a part of PC. But if it cannot be forfeited even though employee terminate their job, it is a part of PC. This is very important point, which cannot be forfeited, part of PC, which can be forfeited if employee terminate, it is not a part of PC. This is very important point, can be asked in exam and in the form of MCQs also. In the form of MCQs also. Chalega? Understood? Then coming to this point, this is the very important, already asked in exam many times. Ki acquire share based payment award in exchange for award held by Enquiry Exchange. So any SBP award of accounting Enquiry, employee share based payment award of can be replaced by whom? Account can be replaced by the SBP award of accounting acquirer. Then in that case, what Ind AS 103 says that this is A limited, this is B limited. So they have an SBP award. So can they have already applied 102. So they have EB expense to SBP reserve already they have done. So in their balance sheet, this SBP reserve will come or not? Correct? Understood. So but this SBP reserve is a liability or equity? The liability or equity? Now, if it is SAR, then what will come? SBP liability. So right now we are discussing about equity settled or cash settled. Equity settled. We are not discussing about cash settled. Cash settled means it becomes SBP liability. All the SBP liability will be assumed at what? Fair value. At fair value. So we are discussing about SBP reserve. We are not discussing about SBP liability. Understood this point first. So we are discussing about SBP reserve. So in the books of B limited already we have SBP reserve. In the books of B limited already we have SBP reserve as per which Ind AS? Ind AS 102. Now what they are saying, कि suppose the 5-year was vesting period, out of which 2 year has been expired and 3 year is not yet expired. Now this A limited acquire B limited, so all the employee of B limited now will become employee of A limited. So now in future this employee will provide services to whom? A limited. But B limited might be liquidated. B Limited might be liquidated. To in that case, A Limited will replace the SBP award of B Limited with their own SBP award. So they will have also some SBP award. So they will replace this award for the benefit of employee. For the benefit of employee, they can cancel also. Cancellation done, the game is over. Cancellation done, then no accounting treatment. In the books of A Limited, we are discussing about in the books of A Limited. If cancellation done, then the cancellation already we have done under IND AS 102 also. So IND AS 102 now applicable in the books of B Limited. Right now we are discussing from A Limited point of view. We are discussing about A Limited point of view. Understood? Now the fair value of this SBP award on the date of acquisition is suppose 500 lakh, and the fair value of this SBP award is suppose 600 lakh. 600 lakh, and the total vesting period of this award, let us assume it is 4, out of which can is it 2 year already they have provided services to whom, and for 2 year they will provide services to whom, A Limited. So can you say it relate to pre-combination period and post-combination period. So what IND AS 103 says that this amount will be attributable to pre-combination period and post-combination period, and any amount attributable to pre-combination period will be included in what, PC, and any amount which is attributable to post-combination period will be accounted as EB expense during post-combination period as per IND AS 102. So as per IND AS 102, now in this chapter, can you say whatever we are doing on the date of acquisition? Means if they are asking subsequent accounting is not covered as per 103. That will be as per respective IND AS. Therefore, they will ask only what? On the date of acquisition. So whenever questions come for this chapter, business combination, they will ask only what? 103. So subsequent accounting is not relevant. So from examination point of view, this amount is not relevant. Only this amount is relevant. So how to calculate this amount, that I need to inform you. So what IND AS 103 says that this will be equal to fair value of original plan. Original plan was this na. The fair value of original plan multiplied by expired period divided by original vesting period or replaced vesting period, whichever is higher. This is the formula. But what was the fair value of original plan as per my example? What is the expired period? What is the original vesting period? What is the replaced vesting period? Whichever is higher. It is 500 into 2 by 5. It means how much? 2 point? It is 200. 200. Correct. Suppose they ask some MCQ question and they will ask how much will be allocated to post combination period. In MCQ question they can ask now. So this will be 600 minus 200. This will be accounted as EB expense for how many year? 2 year. As per which IND AS? 102. As per 102. Chalega. Done. Have you understood? Correct. Means what journal entry you will do on the date of acquisition? Batao. Suppose INA acquired. Suppose INA acquired is 500. So INA account debit how much? 500. To PC. Suppose cash payment is 400. Cash payment is 400. But this will be accounted as what? This 200 will come as what in the books of A Limited? 2 bolo? Bolo, जोर से बolo. 2 SBP reserve. 2 SBP reserve. Why I am asking जोर से? Because you should say yes with confidence. ठीक है ना? With confidence. SBP reserve. These all points are doubtful point in exam hall. These all points are doubtful point. Means you know, but you will stuck in this point. You will stuck in this point. Correct now. So this will be accounted as what? SBP reserve on the date of acquisition. This will come in the balance sheet of A Limited. In the balance sheet of A Limited on the date of acquisition. Understood? The difference will be goodwill or gain on bargain purchase. Goodwill or gain on bargain purchase. Understood? Correct? Correct. Simple. Done. I hope you have understood. Aage chale. So that is same thing written. You can read it. Okay. Now, sometime non-replaced award of Enquiry. Means suppose the SBP award of Enquiry is not replaced by accounting acquirer. It means it is only possible when Enquiry is not liquidated. For example, in case of formation of subsidiary, the subsidiary is not liquidated, so they will not replace it. Quite possible now. It is also quite possible. In that case, what they want to say, same type of thing, non-replacement. So what is the fair value of original plan now, because there is no replace plan. The fair value of original plan on the date of acquisition will be allocated to period: pre-combination period and post-combination period. Pre-combination period will be classified as what? NCI. Will be classified as NCI because Kenis is now employee of accounting acquirer will get equity shares of accounting acquiring when it will be exercised. So they will become what? Other owner of what? Other owner of accounting acquiring apart from parent company. So that will be classified as what? NCI. That will be classified as NCI. Till now not asked in exam. It can be also asked in exam. Correct? So this has been already asked. This is not yet asked. So fair value of original plan will be allocated in two parts: pre and post combination. So how to this? This will be fair value of original plan multiplied by divided by original vesting period, or very good, modified vesting period, whichever is higher. Modified vesting period. So it is quite possible it is not replaced, but the plan is modified. The plan is modified, not replaced. Plan is modified. So it is original vesting period or modified vesting period, whichever is greater. Correct. And any amount which is attributable to post combination period will be what? Will be accounted as a EB expense of accounting acquirer. EB expense of accounting acquirer as per Ind AS 102. EB expense of no. You have not understood. Dekho, just try to understand. Whatever we are doing from A's point of view. We are not doing from B's point of view. Correct now. But I said what you are not able to do. A limited acquire B limited, but B limited is not liquidated. So it can be two situations. Either it is a subsidiary company or it is a case of demerger where one business has been acquired. Not all business acquired, but employee has been transferred now. Employee of this business now become employee of what? A limited. So of course if employee of B limited will now become employee of A limited, then only we are doing discussion. If employee of B limited remain employee of B limited, then the question is not arising now. Then why replacement? Why non-replacement? That is out of the question only. Are you getting what I am saying? Whatever we are doing from A limited point of view. We are not doing from B limited point of view. Now understood? Correct now. So in post combination period, employee will provide services to whom? A limited. It become EB expense of which company? A limited. Will apply which Ind AS? Ind AS 102. As per Ind AS 102, EB expense account debit to what? Batao. EB expense account debit to what? Very good. NCA. NCA. This is also not important from exam point of view, but it can be important from MCQ's point of view. Understood? Correct. Why NCA? This is doubt. पूछना मतलब I will ask you. ऐसे करके देखो आईब्रो कैसे हो जाता है. Sir, you only say, you only clear it out. I will not ask. I will not ask. Because we have so much experience now. From the face I can understand who have doubt, who have no doubt. From your face, from your sitting the expression we can understand. But will not bar bar say na, because I need to complete my job also na. Correct? Always one lesson I give to my regular class student, that always ask doubt. Always ask doubt. Even though you have understood, ask doubt. Even though you have understood, then also clarify yourself. Once you become CA, then also ask doubt. Because we are auditor and we are suspicious. The best quality of CA is what? He is suspicious na. You need to ask doubt. Correct? Understood what I am saying? So don't move your eyebrow. ठीक है ना? चलो ठीक है. I will say why it is NCI. This is doubt. Because in this case, can I say once the SBP award is exercised, so who will allot equity shares? A limited ki B limited? B limited will allot equity shares to the employee because it is non-replaced na. Award is not replaced. Award is not replaced. So who will allot equity shares? B limited. So once they allot equity shares, B limited allot equity shares to the employee, they become the owner of B Limited, and any other owner of B Limited is what? NCI. Understood? Now understood. Therefore, it will be classified as NCI on the date of acquisition, and also for post combination period. It is an EB expense of which company? EB expense of which company? But can you say EB expense to SBP reserve? Because A Limited will not allot equity shares. Who will allot equity shares? So in future it will become what? NCI, non-controlling interest. So EB expense account debit to NCI. Now understood? Now understood? Yes sir. Chalo. Okay. Done. So this you can read. So there is 2 points actually, non-replaced part. If the plan is already vested, so all the period has been expired, then entire amount will be classified as NCI. But if the plan is non-vested means unvested, the plan is not yet vested, then pre-combination period and post-combination period. Pre-combination period will be included as a NCI on the date of acquisition. Post-combination period, it will be treated as EB expense of the acquirer and credited to NCI. Chalega. PC done. So step number 3 is done. So PC is one of the important points for this chapter, because whatever question they will do, they will try to hit with PC, and PC is wrong. Now after that, whatever you are doing, that is not correct, because PC will affect all the calculations. So be careful about PC. I will do 2 time cross check, because normally we take wrong information. We know everything, but we take wrong information. So high chances you are doing some calculation mistake in PC only. Got this point? Once PC done now, this chapter is super easy, I will say. Because I will say you have done better question in amalgamation chapter in CA Inter. Because it will be only but lengthy question, but the calculation very easy. Correct? Yes. Now can recognition and measurement of INA, this is not at all important from exam point of view, because fair value will be given. Na. So all the INA fair value will be given and fair value not given. Whether you are going to measure fair value? No, because that is as per IND AS 113. So we are not going to measure any fair value. We will assume that carrying amount is equal to what? Fair value. So from exam point of view, this is very simple. But what they want to say, there are some points which you need to keep in your mind from MCQ question or any theoretical point, whatever. When to recognize such INA? So what they are saying, INA is identifiable net asset. INA of acquirer will be recognized in the books of acquirer if it meet the definition of assets and liability. Even though it does not meet recognition criteria. Means what they need to satisfy? Only definition criteria, not recognition criteria. Only what? Definition criteria, not recognition criteria. But the asset definition and liability definition is given where? Very good. In conceptual framework chapter. So don't write down as per IND AS. The asset definition and liability definition is given as per the conceptual framework. So what they are saying, INA of acquirer must be the definition of asset and liability on the date of acquisition as per the conceptual framework for the financial reporting under IND AS. And that assets and liability must be exchanged as a part of business combination. It is recognized even though it was not recognized in the books of acquirer. For example, brand. So brand in the books of acquirer was not recognized because it was self-generated. It meet the definition of intangible asset, but does not meet recognition criteria of IND AS 38. I hope you are understanding. Therefore, was not recognized in the books of acquirer. Now, brand was acquired and the fair value was given. So, whether it can be recognized? Yes, because it will meet the definition of asset, even though it does not meet the recognition criteria. Understood? So, what is relevant? Definition, recognition? Definition. Definition is relevant, recognition is not relevant. Now, what I have seen in exam question or ICS study matter question, they say in this way, कि assets and liability meet the recognition criteria. That is not required only. Means the person who has created this question does not know about IND AS 103. I will say recognition criteria is not required only. What is required? Meet the definition now. So assets and liability, even though does not meet what? can be recognized if they meet what? Definition. But can you see recognition criteria is satisfied? Means definition to satisfy hui gaya na. So even though they are saying recognition criteria satisfied and nothing has been mentioned for definition, it is presumed what? Ki definition is satisfied, because first we apply definition, then we apply what? Recognition. We will not do in this first recognition and definition. So if I am saying recognition criteria is satisfied, means what? Definition is deemed to be satisfied. Definition is deemed to be satisfied. I hope you are understanding. So don't go as per the question. Think emotionally also. Think emotionally also. Chalega? Yes, sir. Correct. Now measurement will be done as per Ind AS 113 at fair value, and the fair value will be given in the question. Now there is some point intangible asset. Now can you see we recognize all intangible asset fair value apart from goodwill? Apart from goodwill, because goodwill will be always balancing figure in this chapter. Goodwill will be always balancing figure in this chapter. The goodwill is not recognized as fair value because that will be a balancing figure in this chapter. So apart from goodwill, all intangible assets will recognize as fair value on the date of acquisition. If it meet the definition of intangible asset, even if it does not meet the recognition criteria. What is the meaning of intangible asset? It must be identifiable, non-monetary item without physical substance. What was the identifiable? Two conditions. It must be separable, or it arises from contractual or any other legal right, even though it is not separable. This meaning is very important. So what Ind AS 103 says that such intangible asset must be resulting from contractual or other legal right. If not separable, then we can recognize. Or other intangible assets which are not resulting from contractual or other legal rights should be recognized if and only if they are capable of being separated from acquiry. Means separable. Means whenever intangible asset is there, first ask whether it arises from contractual or legal right. Correct now. Either there will be yes or no. Yes. Recognize? No. Then ask, is it separable? Are you getting what I am saying? Separable from acquiry? Yes, no. Yes means recognize. No means do not recognize. Do not recognize as an intangible asset in the books of acquirer. Even though they said it does not meet recognition criteria, recognition criteria is not at all relevant. Recognition criteria is not at all relevant. Understood this point? Correct? Yes, sir. I'll just give one example. Suppose there is one question of they acquired some workforce, skilled workforce. Correct now. They have acquired some 10 group of employees who are skilled workforce. Correct. Now the question is that when we acquire skilled workforce, whether it can be recognized as an intangible asset. No, but in exam don't say no, say these two conditions. Correct now. Why it is not recognized? Because of these two conditions. So you need to say no, but with these two conditions. I hope you have understood. No is the answer, because you have done this chapter. I know everyone knows this point. No, but if they ask reason, you will give reason like this. You can't say only what? No. It is a correct answer, but not correct as per ICAI. Chalega? If they ask reason, then only say. If they don't ask reason, then okay. Thank you very much. Then contingent liability is also very important. The contingent liability of acquirer can be recognized in the books of acquirer even though they do not meet the condition given under Ind AS 37. So for recognition of contingent liability of acquirer in the books of acquirer, Ind AS 37 is not applicable. They say they need to satisfy two conditions as per Ind AS 103. That two conditions are what? There must be present obligation arising from past event. If question is silent, always will assume that this is what? Satisfied. If the question is silent, correct. Arguing if question is silent, always will assume that yes, there is a present obligation arising from past event. Second condition is what the fair value can be measured. So if in exam fair value is given, so we'll assume that yes, both the conditions are satisfied and recognized as a liability in the books of acquire. That liability will be recognized as provision. Don't provision. It will come in the balance sheet as provision. Even though outflow of resource was not probable, even though outflow which is required to settle the obligation was not probable. So that second condition is missing यहाँ पर. Second condition which was given under Ind AS 37 is missing यहाँ पर. चलेगा? Yes, subsequent accounting will be done as per respective Ind AS. So we are dealing with on the date of acquisition. On the date of acquisition, Ind AS 103 is applicable. Subsequently apply Ind AS 37. Subsequently apply Ind AS 37. चलेगा? Yes sir. Now calculation of DTA and DTL. This to already we discussed. I think no more discussion required. Find out fair value of INA. Correct. Find out the tax base of INA, and the tax base of INA, if given, thank you very much. If not given, then it will be equal to carrying amount of INA from examination point of view. This will be temporary difference. If this is more than this, then taxable, or it can be deductible. Taxable then DTL, deductible means DTA. So this is understood point. Correct. Measurement MNC already simple. Fair value method and Pasina method. Already we discussed in consolidation chapter, same thing will be continued. Goodwill, same formula we have done. Same formula in good which chapter? Consolidation chapter, same formula. Fair value of consideration paid or transferred. Fair value of previously held equity interest. Fair value of Pasina of NCI minus fair value of INA. Goodwill or gain on bargain purchase. This fair value of INA always calculate after deferred tax. After deferred tax means after DTL or DTA. Correct. Now gain on bargain purchase, what Ind AS 103 says that this gain is a rare situation. Normally gain will not arise. Normally gain will not arise. Always there will be goodwill, because if the fair value of INA is 100 crore, you will demand 100 or more than 100 or less than 100. Now either equal to or more than. Either equal to more than, but it will not be less than. If I say the fair value of this mobile is what, 1 lakh, so I will demand either 1 lakh or more than 1 lakh. Karna, you will pay either 1 lakh or more than 1 lakh. How you can negotiate? Sir, no sir, 90,000. So I will say ghar ja. I will say ghar ja na. But when it will be less than fair value? When it will be less than fair value? When I am under financial stress, I am in the financial difficulty, I am indebted, I am going to become insolvent. Sorry, my example is wrong. Some other person. Sometimes whatever we say, वैसा हो जाता है. इसलिए say always what? Positive about yourself. Correct now. It was only an example. I correct my word. There is some other person who may become what? Indebted. Correct now. And I believe this. I really believe this. Correct now. I will never say negative about myself. And I believe this. Correct. And it normally happens. Whatever you say, you become that. So if you say positive about yourself, positive things will happen. If you say negative about yourself, negative thing will happen. So in the worst circumstances, say positive about yourself. Always say that CA is very easy. Yes or no? If you say CA is difficult, it will remain difficult only. Correct now. You are going to pass in this attempt now. In this coming all the month, this should only come. Not only in the classroom. Means in your mind, देखो mind is disturbing, mind will go somewhere. Whenever it is going somewhere else, correct now, start saying, C is very easy, I'll become. Say 10 times. Immediately say 10 times, because sometimes we get fear. There are some normal fear, there is some abnormal fear. Normal fear is okay, but abnormal fear is dangerous. So whenever abnormal fear is coming, say your mind, be calm. 5 minutes, be relaxed and start saying that you are going to become CA, 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 you are going to become CA. Automatically energy will come. Automatically energy will come. Understood? Because mind will go somewhere. And we need to control our mind. And if you can control your mind, you can prepare. And if you can prepare, then only you can write. And when you can write, then only marks will come. So everything is dependent now. So think about preparation. Don't think about result. And normally we think about what? Result. And if you want to cry now, cry after exam, after all the exam, after all the exam. First lesson, whatever is very important, the paper one went, don't think about paper one, think about paper two. And normally we think about paper one only. Paper one में हो गया ना. Once paper one is completed, think about paper two. If you think about paper one, so that will affect your paper two. After paper two, think about paper three. And this should be done up to paper number 6. After paper number 6, think about all the paper. And if you want to cry, cry after that. Cry after that. Understood? Are you able to understand? If you want to cry, cry after that. Are you getting? So if suppose only you have written 60% of marks, suppose 60% attempted in FR paper, हो गया ना, हो गया. Now done ना. Now if you are writing, so think about paper 2. Why you are verifying the answer? No sir, I can get 65 also sir, out of that. Correct na? No. Correct. Normally student message me after exam FR paper, sir, whether I will get marks. I will say yes, you will get marks. Because a single word of mine will affect your entire exam. So I will always say yes, pakka you will get 14 out of 14. So don't ask me. Simple. Understood? So I will say don't ask anyone. Don't ask anyone. Don't discuss with anyone. Remain silent. Only the silent person become winner. Silent person become winner. Understood? Remain silent for this next 2-3 months. And believe me, CA is very easy. If you eliminate all these factors from your life, try to eliminate that things. Correct? How many of you have surrendered your mobile? Today you came without mobile. Then home you will keep it again. Achha. So girls, I know you need to carry. I can understand. You need to carry mobile. 100% carry. But once this class is over, when you are home, I can understand. You need to carry. If I will also say carry your mobile. Okay, na? Girls need to carry. 100% necessary. Correct now. But once you are relaxed with these classes, hand over. Hand over. For girls, for boys, whoever is matter, not matter. But this is disturbing element. Correct now. Give your mobile once again. I am saying once this all the classes over, revision classes over, to someone from where you can't take it. And if you want to take it also now, in the night use it for only 10 to 15 minutes. 10 to 15, not more than that. Not more. 10 to 15 minutes use it, because you might receive some important message from your friends, faculty, etc. That is also important. If you want to use for only 10 to 15 minutes. Correct? But give it to someone. So can I say, whenever we are in financial difficulty, then only bargaining is possible. So what Ind AS 103 say that if there is an evidence of bargaining, then gain on bargain purchase will be transferred to capital reserve through OCI. Through OCI. Accounting treatment, you understood? So it will be transferred to separate component of equity, that is capital reserve, through OCI. But if there is no evidence of bargain purchase, but still gain is coming, so it might happen you have done some error. You have done some error while calculating the fair value. So what they are saying, once again remeasure the fair value of INA, fair value of NCI, fair value of PC, or whatever. And if again after that remeasurement gain is coming, so that gain will not be transferred to OCI, gain will be directly transferred to what? Capital reserve. So this accounting treatment may be now asked. Means previously though I used to say not important because they ask only balance sheet. So ultimately in CBS, whether this case or this case, it will transfer to what capital reserve. But now with MCQ this become important. Correct. As per IFRS 3, there is one carve out. This gain will be transferred to what PL. Gain will be transferred to PL. So they have not done this much discussion. They said whatever gain is coming, transfer to what PL. Correct. Done. All the step has been done. Correct. Now, from examination point of view, what type of question can come? Means if I'll see only the question given in ICAI study material. So from ICAI study material point of view, there are few questions, only 6 to 7 questions given. If you can do that much, and that type of question they ask in this super easy chapter. So from I will just, because this is exam point, because I am teaching from exam point of view, so what type of question they can ask? One is for formation of subsidiary. See, on the date of acquisition, the control is obtained and this is subsidiary. This type of one question can come. Or they will ask a question of what? Reverse acquisition. They will ask a question of reverse acquisition. Because this is thoda sa interesting, reverse acquisition. Or they will ask a question of demerger, which is under common control. Demerger under common control. Or they may ask a question of any business combination which is under common control. Correct. Means this will cover 4, 5 question or 6 question, whatever they have given, all that question it will be covered. Correct. Understood. Correct. Whenever there is a formation of subsidiary, so they may ask with step acquisition. Step acquisition means initially they acquire 20%, then again they acquire 40%. This type of question can be asked. Last time also they have asked that question already. Correct. Initially 40%, then 20%. ऐसा कुछ था question. Correct. So this type of question can be asked. In this case, if they ask on the date of consolidation, it is a question of what? IND AS 103 and IND AS 110. Then means it is a question of consolidation. So if they ask only on the date of acquisition, means they ask only 103. But if they are asking on reporting date to prepare consolidated financial statement, there is a question about consolidation. Then whatever we have done that question in that chapter, that will be followed. Are you getting what I am saying? Yes, sir. So whenever there is step acquisition, so already I have done this. See, on the date of step acquisition, means for step acquisition, goodwill or gain or bargain purchase will be calculated when the control is obtained, and any previously held equity interest will be remeasured at fair value on the date of acquisition, and the difference will be transferred to PL or OCI as the case may be. This already is known. But I would like to take one question where initially it was associate and then what it become? Subsidiary. Correct. So I have taken that question. That question is also asked in exam. Already asked in exam, which might be important from examination point of view. So come to one question. This question. Question 9. On 1st April 2006, company PQR Limited acquired 30% of voting ordinary shares of company XYZ for rupees 8,000 crore. PQR account is investment using equity method as prescribed under IND AS 28. At 31st March 2017, PQR Limited recognized share of the net asset changes of XYZ Limited using equity accounting as follows. So share in profit, share in exchange difference in OCI, and share in revaluation reserve. So for that already Ind AS 28 will be applicable. But what journal entry will do for this as per Ind AS 28? Investment account debit to share in profit from associate transfer to PL. What journal entry will be done for this? Investment account debit to share in OCI transfer to from OCI it will go to FCTR foreign currency translation reserve. This will be transferred to retained earning. Correct. And what will be journal entry for this? Investment account debit to share in OCI transferred from OCI to what? Revaluation surplus. And the carrying amount will become 8,000 plus this plus this plus this, which will become what? 8850. Then on 1st April 2017, PQI Limited acquired the remaining 70% for cash of 25,000 crore. 25,000 crore. The following additional information is relevant on that date. Fair value of previously held equity interest 9,000. Fair value of identifiable net asset 30,000. How should such business combination be accounted for? So, बताओ what journal entry will do? बताओ. On the date of acquisition, बताओ. INA account debit how much? INA account debit 30,000. Okay. To cash how much? 25,000. To investment how much? Investment how much? Now, if you are writing 9,000, it means you have done one more journal entry before that. So it means you are doing separate journal entry. So one journal entry do you need to increase that investment from 8850 to 9,000. So what journal entry do? Investment account debit how much? 150. And this gain will be transferred to what? Gain will be transferred to what? PL. PL 150. Now write down to investment how much? 9,000. And the difference will be what? Difference will be what? Bata? Goodwill. Goodwill is how much? How much? 4,000. Goodwill will be 4,000. If suppose they have given deferred tax, be careful. Then deferred tax asset and liability will also come. Got this point? Chalega? Yes, sir. So 1, 2. Now can I say two more journal entry is required? But what is that journal entry? Means this journal entry you have done as per which Ind AS? 103. This journal entry also you are doing as per 103. But two more journal entries required. Can you see we have FCTR and revaluation surplus? When I have done Ind AS 28, I said that on discontinuation of equity method, we need to de-recognize any OCI component as per respective Ind AS. As per respective Ind AS. So we have an FCTR, but it will be reclassified to PL. It will not be reclassified to PL. Reclassified to PL. What journal entry will do? OCI, FCTR, account debit to what? To gain you can say. Transfer to what? PL. How much? Whatever the amount. Amount is how much? 100. 100. And revaluation surplus. But reclassified, not reclassified to PL? Not reclassified to PL. So what journal entry will do? Revaluation surplus. Account debit to retained earning. How much? 50. I think 50 it is. 50. Then so total gain become how much? 250. This 250 will be transferred to what? PL. And so this become 4 journal entry. Now this question can be asked in MCQ also. Be careful. Very good question. Already asked in exam for I think 8 marks. It is already asked. Super easy question. But you need to retain all the points. Chalega. Understood? Have you understood? So one more point, just try to understand. Suppose you acquired 30% यहाँ पर and it become associate. I'm just asking a general knowledge question. Apply your general knowledge, common sense. ठीक है ना? My question to you is share in profit, share in OCI. This type of journal entry will be done at which point of time? Means you recognize share in profit now for equity method. So you recognize share in profit or share in OCI at which point of time? Reporting date means you need to wait for what? 31st March na? Then only we know what is the actual profit, what is the actual OCI. बताओ. Now 40% acquired यहाँ पर. This become discontinuation of what? Equity method. My question to you, can you recognize the profit here? बताओ. Have you understood my question? Not able to understand my question. Question you are not able to understand. Suppose in exam they have said you acquire 30% यहाँ पर, you acquire 40% यहाँ पर. So this sharing profit will be added, will not be added? Huh? Will be added. Will be added, will not be added? How it will be added? Whether SOPL is prepared, huh? And whether this is console, whether you have control over that company. No. Just try to understand what I am saying. Correct now. This is not possible practically. What is the total profit that is transferred now? It is quite possible. Initially there was a loss, then it become what? First we need to prepare balance sheet as on this date. We need to prepare trial balance as on this date. Then we need to find out what? Profit as on this date. Practically not possible. For associate, practically not possible. Suppose I acquired 20% interest on your company, and after that I have sold what? 20% after 2 months. Whether I will demand what from you? You give me what? Your SOPL as on this date, and you will give me. अरे बोलना रे, you will say घर जा. Correct ना? अरे बोलना रे. So my question to you, suppose an exam में question आया 30% और यहाँ पर 40%. What will do about this profit? What will do about this profit? What will do about this profit? Means can I say carrying amount as per equity method will remain same or not? Will remain same or not? अरे बोलना रे. Last time the same question came. 40% यहाँ पर, and then again I forgot the question actually. 30% यहाँ पर होगा. Correct. तो बताओ यहाँ पर they have already applied equity method. यहाँ पर the carrying amount as per equity method will be how much? Same only na. Only what Ind AS 103 says that find out a fair value and find out a difference, and the difference will be transferred to what? PL. And can you see this paper? Just try to understand. I am just giving because I have given my suggested solution and somebody started blaming me. He said your answer is wrong. So I normally don't comment anything in YouTube because YouTube is what? Student will say anything, but I am not there to fight with anyone now. Just try to understand. I am just giving a clarification to you. Till now I don't know about ICAI solution what they will give. If ICAI has not given solution, that is my suggested solution. That is my solution na. अरे बोलना रे. That is as per my suggestion, which may or may not be equal to what? So whether I am saying no, this is only correct. You have faith on this. Don't see why if you don't have faith. Simple na. That is my suggested solution. I am waiting for what? ICAI. If ICAI has given some alternative solution, but after that what I will follow? I will also follow ICAI only. I never fight with ICAI. Correct now. But as per my understanding, practical knowledge, I have given what? As solution. As per my practical understanding of that particular chapter. Because if I will give as per my solution, the entire chapter, this consolidation chapter is wrong from what? Practical point of view. Entire chapter is wrong. Because when we do time adjustment, but whether it is correct, but 3 months and 9 months, this is the date of acquisition. Practically can we do in this way? Practically this chapter is wrong or not? But I am following what? ICAI solution. Because on that date, yeah, these 3 months and 9 months is relevant. So once again, whatever solution we give, as per our best understanding we give, then we wait for what? And believe me, this time, the last time, now no one has released suggested solution. Only one person, I have released. किसी का हिम्मत ही नहीं हुआ. And then also student are blaming me. Your answer is wrong. अच्छा लगता है बताओ. I will also wait for what? ICAI solution. अरे बोलना, it is very easy ना. Review सब देते हैं. Solution कोई नहीं देता. Paper is good, paper is hard. 5-minute review, 1 lakh view. मजा आता है ना रिव्यू देने में. Are you getting what I am saying? Solution दो ना. Whenever ICAI same to same question is coming, now everyone is coming with solution. This time no one came. This time no one came with solution, only review. Because I will not say anything. Remain silent. But can you before commenting, you should think 5 times what you are commenting about any teacher. Am I right or not? Once again, there is a disclaimer, that is my solution. You want to follow. You don't want to follow what ICAI. Wait for ICAI solution. Because my student demanded, so I have given. My student have faith on me. Are you getting what I am saying? Correct? So that is only a disclaimer I am giving. We give solution for students who have faith on us. And always, before releasing, I say, ICAI answer may be different. ICAI answer may be different. I am just saying because this topic came, therefore I am explaining. It is not practically possible. Now, if ICAI is doing in this way, I will also do in that way. But till now, no question, no solution. So from practical point of view, it is not practically possible. And one more thing, suppose this is 1000 carrying amount. I'll just give you my clarification also. What IND AS 103 says that calculate fair value. Fair value is based on INA. Fair value of INA. Okay, this fair value of INA will be inclusive of profit. It means this difference automatically that profit is calculated or not, and that is transferred to PL or not. So ultimately the objective remains same only. Are you getting? Therefore, I think ICAI will follow my solution only. But till now no solution came, so I am silent. What I am saying, as per the best understanding of this chapter, what I am saying, which I may be different from ICAI, 40%, 30%. So this is the carrying amount, and suppose 103 is applicable यहाँ पर, then we are not supposed to transfer any profit to this investment. We'll only measure carrying amount and fair value as per IND AS only. IND AS says remeasure at fair value and then transfer difference to PL and OCI. So carrying amount came because carrying amount will change on this date now. Are you getting what I am saying? So that is the point. That is the doubt. I have cleared that. Understood what I am saying? And they go in every question of ICAI, whatever they have given till now, they have given what on 1st April, and this is on 31st March. Means no question of that nature is given ICAI study matter till now. Directly came in what? Exam. Directly came in exam. And that too I will say by mistake. ICAI have not realized that we are creating that type of question. By mistake हो गया. I also know ICAI how much, because solution आने में बहुत time लगेगा. Are you getting? That is by mistake हुआ. They were supposed to give 10% like this. By mistake they have given 40%. Okay? Means they have not realized that they are creating that type of questions. But chalo, we need to understand the emotions and we need to answer it. Okay? I hope you have understood this question. Chalega. Now, coming to measurement period. This measurement period is very important from exam point of view as well as practical point of view and MCQ's point of view. I am expecting one question of these in exam. Now what is the measurement period? What they want to say? Suppose this is 31st March and this is the date of approval. Correct? And business combination has been done just before what? 31st March. So it is quite possible that we are not able to estimate the fair value of INA before approval of financial statement. but can is we need to prepare our financial statement and present to respective department. Therefore, India's 103 has given some relaxation. What they want to say ki you can do the accounting of business combination on provisional basis. Means on this date, because you do not have valuation report from the expert, so you are not supposed to wait for that valuation report because it may take more than 1 year. So complete accounting on some provisional basis and recognize goodwill again on provisional basis and finalize your financial statement. Then we'll give you 1 year from the date of acquisition. This is known as maximum measurement period. This is known as measurement period, maximum of how many years? 1 year from the date of acquisition. Now during this measurement period, of course after approval of financial statement, because before approval of financial statement it become adjusting event. So after approval of financial statement, you may get some new information. Now this new information are two types. One new information which is based on the facts and circumstances on the date of acquisition, and one new information which is the facts based on the facts and circumstances which arises after what? After date of acquisition. But this new information is not relevant for this accounting because that arises after acquisition date. So any new information which you obtain is related to the facts and circumstances which is already existing on date of acquisition require adjustment on which date? On which basis? On retrospective basis. On retrospective basis. Now the question is that suppose you got some information, so you will do accounting in which financial year? In this financial year or this financial year? In previous financial year or current financial year? Previous financial year or current financial year? One second, repeat. Once again I will be repeating everything. Business combination happened what? Before 31st March. But you have not obtained the valuation report from expert before date of approval. And therefore India's 103 says that you can do accounting on some provisional basis and finalize the account. So you calculated goodwill on some provisional basis. Now after approval of financial statement, means India's 103 has given a maximum measurement period of 1 year from date of acquisition. Now after approval of financial statement, you may obtain two new information. One is what? Related to the facts and circumstances existing on the date of acquisition. Other is the facts and circumstances which is after the date of acquisition. So of course this is not at all relevant for business combination accounting. That become a post combination period accounting, and that will be done as per respective Indias. Means for this I am not saying do accounting, and sorry, I am not saying ignore it. Do accounting as per respective Indias, as per respective Indias. In simple word I will say one example. Suppose there was some debtor on the date of acquisition of Enquiry, and that debtor already become insolvent before acquisition date, and we got that information after approval of financial statement. So it is related to the facts existing on the date of acquisition, therefore it should be considered for business combination accounting. But there was some debtor which become insolvent after acquisition date, that is relevant for accounting but not for business combination accounting. So for that information you will not apply Ind AS 103, you need to apply what? Respective Ind AS. Understood this point? Correct. Now any new information which is related to the facts and circumstances which is existing on the date of acquisition, you need to follow retrospective accounting. So what was my question? Think and say whether will do accounting in previous year books of account or current year books of account. Is previous year or current year? Previous year. Previous year financial statement already approved. Can we adjust it? Why? I said retrospective. Retrospective means what? Previous year figure in current year financial statement will be restated. So you are doing all accounting in which year? Current year. But on which basis? Retrospective basis. It means for restate previous year amount as per Ind AS 103 on retrospective basis. I'll just give one example because from my point of view, this type of question can be asked in exam. So just try to understand. You'll say me what to do. You'll say me what to do. Suppose this is the date of approval, and there was one property, plant and equipment whose fair value was rupees 10 lakh, which is accounted as per provisional accounting, and goodwill was measured at rupees 7 lakh, and NCI is measured by using Pasina method. NCI is 20%. NCI is 20%. Understood? Now, after approval of financial statement, we got valuation report from expert, and they say, remaining useful life of this asset is 10 years. Suppose this is 1st Jan 2023, this is 31st March 2023, and this becomes 31st March 2024. Now valuation report came and they said the fair value is not 10 lakh, fair value is 12 lakh. Batao, what adjustment you will do? The same question might come in exam. Batao. Can you say we need to increase property, plant and equipment by what amount? 2 lakh. And can you say PP will increase, and if NCI is based on Pasina method, NCI will also increase? So it means 2 NCI. NCI will increase how much? 20% of what? 2 lakh. How much? And the difference will be adjusted where? Can you say IND will increase, so goodwill will decrease. So will decrease goodwill by how much? 1,60,000. Here this journal entry will be effect on the date of acquisition. But can you say from the date of acquisition to last year reporting date, this is how many months? 3 months. So we need to charge some additional depreciation on that 2 lakh for previous year. So we decrease what? PP. So we decrease PP, and of course decrease retained earning also. Retained earning to what? PP. But the 2 lakh divided by what? 10 year into what? 3 by 12. How much? How much? 5,000. So what is the ultimate effect? But the PP will increase by how much? 1,95,000. NCI will increase by how much? 40,000. And goodwill will decrease by how much? 1,60,000. And retained earning will decrease by how much? This will be the restated effect in previous year financial statement. This type of question can be asked in exam. This type of question can be asked in exam in MCQ. Correct. Now suppose they say in the same question ki NCI by using fair value method, but what is the effect? You will give me now effect. Suppose by fair value method, what will be? PP how much? PP how much? Bolna re. NCI how much? Have you understood my question? PC by Pasina method, do you understood na? Suppose in the same question they are saying NCI by using which method? Fair value method. So PP will increase by how much? NCI by how much? No effect, because that is a fair value method and there was no mistake in that fair value. And entire thing will be adjusted where? In goodwill. So that depends upon your journal entry, depends upon NCI. So be careful about NCI. Which method? Which method? Understood? I have given entire point of this measurement period. Only one last point. What IND AS 103 says that once the new information is obtained or expiry of 1 year from the date of acquisition, whichever is earlier, the measurement period will be complete. Means suppose you obtain new information यहाँ पर and this is the end of what? Measurement period. So whichever is earlier. Suppose you obtain all the new information यहाँ पर, so this is the end of what? Measurement period. Or suppose you have not obtained all the new information यहाँ पर, so this is the end of what? Measurement period. Whichever is later. So it is quite possible sorry, whichever is earlier, my mistake, I said later, whichever is earlier, my mistake. ठीक है. Now suppose you obtain some new information at this point of time, means after the completion of measurement period. After the completion of measurement period, quite possible, which is related to the facts and circumstances on this date. Quite possible or not? Then what IND AS 103 says, now it will be an error. Error means apply what? IND AS 8. And IND AS 8 also say retrospective restatement only. Means accounting process will remain same. But this was not an error. And therefore for this third balance it is not required. But whenever there is an error which affect the opening balance of previous year, then third balance is also required, and disclosure required as per IND AS 8. And disclosures are required as per IND AS 8. So this is not an error. This is what? An error. So they may ask you like this. The same accounting treatment more or less remains same. But if it is after measurement period, it become an error, and then you need to apply IND AS 8, not 103. This accounting you are doing as per 103. This accounting you are doing as per IND AS 8. Difference you understood? Difference chalega. So measurement period also you have understood. Then let us come to reverse acquisition. Reverse acquisition is very simple. Only we need to understand the question. Now reverse acquisition from examination point of view. They can give two type of questions. Either they will give a question of absorption. Absorption means what? One company is there and there is another company, and this Y limited will be absorbed by what? X limited, and this will be X limited forever. And in this case, if the accounting acquirer and legal acquirer are not same, then it become a reverse acquisition. So if suppose X limited absorb Y limited, so X become what? Legal acquirer, and Y become accounting acquirer. Now how to identify that too you need to understand as per step number 1, that already we have done. X is a legal acquirer but Y is a accounting acquirer. So we'll do accounting treatment in the books of which company? Understood? So can you say we'll do accounting treatment in the books of what? X, because Y to liquidated na. So in the books of what? X, from the point of view of what? Y. From the point of view of Y. Understood? Correct? So there will be what step you need to be careful. First you need to identify. Step number 1, identify accounting acquirer. First write down identification of accounting acquirer. That you can do. Then step number 2 is the date of acquisition. Identify the date of acquisition, write down the date of acquisition. Whenever this type of questions come now, first write down step number 1, identify accounting acquirer. Step number 2, identify the date of acquisition. Write down the date of acquisition, whatever is given. Then step number 3, you will do what? PC calculation. Calculation of PC. This only you need to understand. So in this case what you will do? If first you need to find out effective number of shares which would have been issued by Y if they would have acquired what? X legally. Means can I say what you will do? Number of shares of X multiplied by fair value of shares of X divided by fair value of shares of Y. This will be the number of shares which will be issued by Y to the owner of X if Y would have legally acquired what? X. This become effective number of shares to be issued by legal acquirer, as it would be issued by accounting acquirer to accounting acquiree. Understood? Then the effective consideration, effective PC will be equal to this number of shares, whatever you have calculated, multiplied by the fair value of shares of Y Limited, means accounting acquirer. This become what? PC. This become PC. Understood? Then if this is effective consideration, apply what? Calculation, means measurement that will be given, fair value of INA that will be given, then calculate goodwill or gain on bargain purchase. So in this it will be fair value of effective PC minus fair value of INA of what? Accounting acquiring. Accounting acquiring. Accounting acquiring means what? Legal acquirer. This will be goodwill. Understood? Now just try to, when you are doing journal entry, normally they don't ask journal entry in exam, but suppose they ask journal entry in the books of X from the point of Y. So guys, the first you need to eliminate all the asset, all the liability and all the equity of X from that balance sheet. So in the books of X already we have asset, liability and equity of X, that you need to eliminate. So you need to eliminate all the asset, all the liability, all the equity of X from the financial statement of X. So what journal entry will do? Equity share capital account debit, reserve and surplus account debit, liability account debit to all assets. Then can I see you need to incorporate all the asset, all the liability, all the equity of Y in the books of what? X, as it is, means at carrying amount. So what journal entry will do? Asset account debit to what? Liability, to equity share capital, to reserve and surplus. Then it to apply IND AS 103 from the point of Y in the books of X. Means now recognize the INA of X at fair value, compare with the PC and recognize goodwill or gain or bargain purchase. Then what journal entry? INA account debit at fair value. Correct. To PC, whatever you have calculated, and the difference will what? Goodwill or gain or bargain purchase. That journal entry you do. Correct. Understood? Means can I say when you are preparing balance sheet, so you are preparing balance sheet of what? X from the point of view of what? Y. But in exam don't write from the point of view of Y. Write on balance sheet of X. Don't write down from the point of view of Y. That is understood. That is understood by. Now in this case, can I say asset will come and equity share capital will come, other equity will come, liability will come. Can I say this will be book value of what? Y plus fair value of X. Understood? Correct. Liability will be what? Book value of Y plus fair value of X. Can I say this will be what? Book value of Y plus what? PC, effective consideration. Effective consideration. And this will be what? Book value of Y plus nil, nothing. And the balance will tally. And balance will tally. Provided there is no gain on bargain purchase. If goodwill is there, so goodwill will come यहाँ पर. And gain on bargain purchase will be added to what? Other equity. This is the simplest question which can be asked in exam. Simplest question. Correct. Now only doubt will come for this. Just try to understand. Can I say this will be book value of Y plus PC? PC means effective consideration. Correct. But as per Companies Act, can I say this should come at nominal value? So can nominal value means what? Legal number of shares. Legal number of shares issued by whom? Issued by X to Y, which will be different from effective consideration. So this and this will not match. This and this will not match. Understood? As per ICAI solution, leave it as it is. Because it is a point of what? Clarification. Till now, no clarification has been given by ICAI or any other authority. See what need to be done as per what? Practically means from examination point of what we should do. So of course this will not match. So what we'll do, we'll just write down this and will just give a note. The legal number of shares is this much. As per Companies Act, it should be reported at nominal value of what? Legal number of shares to be issued, which have been issued. Just write down one note and leave it. Understood this point? So this and this will not match. So exam point of view, don't try to match it. Don't try to match it. Just but write down one note. As per Companies Act, the equity share capital should come at legal number of shares multiplied by nominal value. Just write down and leave it. Okay? Chalega? I think you have understood. Now, if it is a question of what? This x and y become xy. Then in this case, can I say either x will be accounting acquirer or y will be accounting acquirer? Let us assume x is what? Accounting acquirer. Let us assume. Now, in the books of xy will do accounting treatment from the point of view of x. So, can this xy balance is already empty? There is nothing. We will bring all asset, all liability, all the equity of x at which amount? Carrying amount. And then for this, we will apply what? 103. 103. Correct? Means then same formula remains same for preparation of balance sheet. It is book value of x plus fair value of y. Because in this case, I have assumed what? X is what? Accounting acquirer. And y is what? Accounting acquirer. X is what? Accounting acquirer and y is accounting acquirer. Chalega? Understood? Correct. So means from the preparation, from examination point very easy. From examination point very easy. Correct? But I will like to take one question which is a good question already asked in exam. But whether I have taken this question so easy, you can do it by your own. Whether I have taken that question. Chalo, I'll take. This is a question already asked in exam. 31. Sun Limited and Moon Limited amalgamated from 1st April 2001. A new company Sun Moon Limited of rupees with share of rupees 10 each was formed to take over the business of existing company. You can see it is a question of amalgamation when Sun and Moon join and become Sun Moon. Informations are given. Notes to account, they have given other equity, general reserve, profit and loss account, investment allowance reserve, export profit reserve. If you remember AS14 used to say that we need to maintain statutory reserve. Now that is not a point relevant for business combination. So any statutory reserve is there. There is no need to maintain it. So that Bakwas Jain used to do amalgamation. You remember amalgamation, adjustment reserve, accountability, statutory reserve. That is now no more existing under Ind AS. So any reserve and surplus, the accounting treatment remains same as we are doing for general reserve and profit and loss account. No special mention of maintaining that statutory reserve. However, as per AS14 also that was Bakwas Jain entry. Sun Moon Limited issued requisite number of shares to discharge the claim of equity shareholders of transfer company. Also, the new debentures were issued in exchange of old series of both the companies. Means this is conversion of new debenture as per debenture of what? New company. Compute PC and advance discharge thereof by preparing a note and draft the balance sheet of Sun Moon Limited, assuming that Sun Moon Limited are not under common control. So they have said that it is not under common control. Means, of course, first we need to, this is a question of amalgamation, always it will be reverse acquisition. Always it will be a reverse acquisition. And management of larger entity out of Sun and Moon Limited will take over the control of entity. Means they have given larger entity will take over. So we need to find out which one is larger entity based on the net worth, etc. The fair value is given of the net asset, PP, inventory, and fair value business. Now when they say fair value business, but the fair value business means what? Whether it is a fair value of INA, it is a fair value of all the net asset including goodwill. So it is always including what? Goodwill. It is always including goodwill. Understood? So this is the fair value of business. Whenever they say fair value of business, you have fair value of entity. Be careful, it is including goodwill. Including goodwill. Chalega? Understood? Now in this question only one point which requires thoda sa clarification या thoda sa revision, that requisite number of shares they have given. So requisite number means minimum number of shares to be issued. Means unnecessary don't issue more number of equity shares. So issue whatever required. Don't calculate higher number of shares. So this is only the point which we need to understand. Correct? You can see in this case there is no swap ratio given. Nothing has been given. No swap ratio has been given. Correct now. So can you say we'll start with the fair value business. What is the fair value business given? Sun Moon. What is the fair value business given? 2 crore 20 lakh and 2 crore 80 lakh. 2 crore 20 lakh and 2 crore 80 lakh. Understood? Correct. Now it is given that means ऐसे कर लो. What is the face value of shares of Sun Moon Limited? It is given 10 rupees. It is given na. Sun Moon Limited has 10 rupees. But this is face value की issue price. This face value की issue price. Face value. Whenever they say off rupees means what? Face value. So of course this is face value. Face value. Understood what I am saying? Correct. Now whenever question is silent about issue price, we'll always assume it is at par. So in this question has not given issue price, so we have assumed that it is at par. Suppose in the same question it is given of rupees 10 each, add rupees 12, then issue price become what? 12. Issue price become 12. But whenever question is silent, we'll assume that shares will be issued at par. Understood this point? So first you need to calculate what? Fair value business, and the fair value business is given the question. Now we'll multiply with what? But the face value ki issue price. Sorry, we'll divide by issue price of fair value, face value. So issue price of equity shares, which is now 10 in the question. Which is 10 in the question. So what will be the number of equity shares? Number of equity shares become how much? 22 lakh and 28 lakh. Based on these, what is the percentage of voting right? Percentage of voting right? It is 44% and 56%. Correct. It means, can I say M Limited become what? Means Moon Limited become what? Accounting acquirer, and S Limited is what? Accounting acquiring. Understood? Now we need to calculate what? PC. Calculation of PC. Understood? Correct. Now because they have given requisite number of shares, so how to do that calculation, that we need to understand. Correct. Now Because can I say here x and y, sorry, sun and moon join together to become sun moon. And what is the number of shares of Moon Limited given in the balance sheet? What is the number of shares? 14 lakh. It is given now. How much? 1 crore 40 lakh divided by 10, it becomes 14 lakh. So it will be assumed that Sun Moon Limited will issue how many equity shares? 14 lakh to the equity shareholders of what? Moon Limited. For how much percentage? 56%. So how many shares would be issued to Sun Limited? For how much share? 44%. So you will calculate what happened. It becomes 14 divided by 56 into what? 44 is equal to how much? 11 lakh. So this become what? Requisite number of shares. This become requisite number of shares. So it means, can I say 11 lakh become what? Number of shares to be issued, and that become effective number of shares also. So what is the PC? PC will be what? 11 lakh multiplied by what? 10. That is how much? 1 crore 10 lakh. And from this, if we minus fair value of what? INA. So that will be what? Goodwill. Goodwill. So that fair value of INA you need to find out, excluding, but you need to calculate fair value of INA, means individually all the assets. So this will become goodwill. Now in this case you can see the balance will be very easy. Balance sheet mein agar aao, in the solution you can see this is what PP. So we will take what? Book value of which company? Book value of which company? Moon Limited. And fair value of which company? Sun Limited. So this is simple, this is simple, all points are simple. Only goodwill as per working note will come. Now when you are calculating equity share capital, batao, equity share capital will take book value of which company? Moon, plus what? Purchase consideration of what? Sun Limited. But the book value is how much? 14 lakh, plus what? Plus 11 lakh, plus 11 lakh. Understood? So it is coming what? Plus 11 lakh is equal to how much? 25 lakh. And you can see the effective number of shares, means legal number of shares, will be also equal to what? Same only. So in this case it will match the legal number of shares plus the equity share capital is matching because of our requisite number of shares. Because of requisite number of shares. So whenever this type of question will come, so always legal number of shares plus the amount of equity share capital will always match, and therefore there is a high chance that they will ask this type of question. They will not ask that type of question in exam, and already this type of question have been asked in exam. You can see they have given 25 lakh equity shares of rupees 10 each of what? 2 crore 50 lakh. Suppose same question come in which they have given, just try to understand. Suppose same question come in which they have given the issue price is what? 15. Suppose. Then this all calculation you can do. All calculation you can do. Now this will become 11 lakh into 15. All calculation remains same. I am just giving one example. Suppose they have given issue price. The entire calculation remains same. You will divide by issue price, na? Are you getting what I am saying? But only one changes you will do, that I am saying. Now it becomes 11 lakh into 15. So 5 rupees will go to what? Securities premium. Be careful. 5 will go to what? Securities premium. So हो सकता है in your exam they have given issue price that is equal to what? 15. Then 5 will go to what? Securities premium, and 10 will remain where? In equity share capital. But that much you need to be careful. Understood? Reverse acquisition done. Reverse acquisition done. So I think my explanation is, I am covering from examination point of what type of question they may ask. Correct? Chalo. Time also over. Means for break. So reverse acquisition done. After that we'll go to what? business combination under common control, and then there is one point of what, demerger, and then definition, and there are some small point of what, this chapter that we need to cover. Okay, now so two important concept is demerger and business combination under common control. Okay sir, we'll take a break of 30 minutes. Mouse, 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 mouse. Hello, 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 hello. Sure. Can we start once again, everyone? Now, the last topic which we have done was reverse acquisition. Understood? Now come to business combination under common control. Now, business combination under common control means that before and after business combination, the entities will be under common control. Got this point? For example, a parent company, a subsidiary company. The parent company control this, and parent company absorb what? Subsidiary company. This is an example of what? Business combination under common control. Or we can say parent company has two subsidiary S1 S2, and S1 S2 join together, or S1 absorb S2. This will be also business combination under common control. Correct? Or we can see in this way P1 S1 S2, and S2 has what? S3 S4. So this S1 has acquired S3. This is also business combination under common control. Got this point? So what they want to say, कि common control business combination means a business combination involving entities of business in which all the combining entities of business are ultimately controlled by the same party, both before and after business combination. Ultimately controlled by same party before and after business combination. You can see they have used the word party. Means the controlling party can be either individual, can be also individual, or group of individual acting together. Group of individual acting together under contractual agreement. Means what they want to say, कि it is quite possible कि Mr. Ram control two company X Limited and Y Limited. Now X and Y join together. So even though Mr. Ram is not required to prepare any financial statement under IND AS, but then also this will be business combination under common control. It is quite possible that Mr. Ram plus Mr. Mrs. Sita jointly control X and Y. They jointly control what? X and Y. So there are group of person acting under contractual agreement, and under that contractual agreement these two entities are under what? Common control. And if they join together, so this is also business combination under common control. Understood this point? So whenever there is a business combination under common control, they need to apply Appendix C to IND AS 103. And Appendix C has given which method? Pooling of interest method. Pooling of interest method. Now whenever there is a pooling of interest method, what they want to say? Ki all asset of which company? Transferor company will be incorporated at book value. To all liability will be incorporated at book value. Correct? And the reserve and surplus of the transfer company will be also maintained at same book value, and their identity will be preserved. Then whatever consideration has been paid, so PC will come with the amount of PC, and the difference between these two will be transferred to what? Capital reserve. Will be transferred to capital reserve. So this is a very simple accounting treatment for business combination under common control. Business combination under common control. So what they want to say? The accounting method is pooling of interest method. All asset or liability of transfer company are incorporated at what? Book value. Correct? No adjustment is made at book value of assets and liability of transfer company, and no new asset or liability will be recognized. So only the assets and liability which is coming in the balance sheet of transfer company, that will be only recognized. Adjustment are allowed only to ensure what? Uniform accounting policy. If suppose transfer company is following a different accounting policy than the transfer company, then to adjust that difference, we can change the book value of transferor company. Identity of reserve of transfer company should be preserved, and reserve and surplus of transfer company should be maintained in the books of transferee company. So in this topic, we will not call them acquirer and acquiring company, we will call them transferee and transferor. Correct? Now my one question to you all, this PC will be calculated. So to calculate this PC, we should take, when I say PC, so we should take fair value of business. When I say fair value means what? Fair value of net asset including what? Goodwill. Or we should take book value of business. I hope you understood my question. To calculate this PC, we should take book value of business, ki fair value of business. Understood what I am saying? My question, have you understood? One second. When I am saying to calculate PC, when we were in acquisition method, so in that case, no doubt, PC will be calculated based on the fair value of business. Means you will pay as per the fair value of assets and liability. So in this case, to calculate PC, you will consider fair value of business. Business means including goodwill, or book value of business. Book value of business means you are conceptually weak. It is what? Fair value of business only. Fair value of business. Understood? Just try to understand this one accounting method. One thing, just try to understand, if X absorb Y limited and the book value, just think about this. You are Y limited, I am X limited. Both are under the control of what? One common party. But your emotions is your emotions, na? So just try to understand, book value is 100 crore and the fair value is 2000 crore. So now X limited absorb Y limited. So it means X limited will exchange their equity shares with the equity shares of Y limited. So you will demand 100 crore ki 2000 crore. Understood? From your point of view, you are saying correct. अभी I ask from your point of view, you are saying 2000 crore. अरे बोलना रे. I ask from your point of view, you are saying 2000 crore. So will you ready with the book value of business? अरे बोलना रे. No, it is impossible, practically impossible. So that is, I will say, conceptually, I will say concept was lacking. You said book value, book value. This is the accounting method. He will incorporate. देखो, I have said when I was saying the journal entry or accounting method, I said assets and liability of transfer company are incorporated. Incorporated at book value, taken over at what? So it means taken over at which value? Taken over at fair value only. But they are accounted at which value? Big value, because there was no acquisition. Because when two party under common control, so actually there is no acquisition. Arvind, there is no acquisition. There is only joining them to bring them together. Understood what I am saying? So PC is based on what? PC is based on what? Fair value, not book value. Understood? And that is only given. The consideration for the business combination may consist of securities, cash or any other asset. Securities shall be recorded at nominal value due to Companies Act. In determining the value of consideration, asset other than cash shall be considered at what? Their fair value. So to find out consideration, you will consider all the assets and liability at which value? Fair value only. But incorporate at which value? Book value. The difference between whatever you have paid, PC, and the share capital of transfer company will be transferred to capital reserve. So the difference will be transferred to capital reserve. This is not gain on bargain purchase. So you don't think that this is gain on bargain purchase. This is directly transferred to what? Capital reserve without giving a name. So gain on bargain purchase will come only in acquisition method. So this is not gain or loss on whatever. This is only transferred to capital reserve and should be presented separately from other capital reserve with disclosure of its nature and purpose in the notes. And so this is a simple accounting method. Simple accounting method. Correct. I am just taken one example to explain what can be the possible journal entry. You can see A limited, B limited, asset, cash, equity, share capital, reserve and surplus liability. Additional information: A, B, fair value of asset, goodwill is given, asset other than cash is given. A limited absorb B limited and agree to allot shares to B limited shareholders on the basis of intrinsic value of shares. You know intrinsic value? How to find out intrinsic value? Asset minus liability. This divided by what? Number of equity shares. So this become what? Intrinsic value of shares. Intrinsic value of shares. Chalega? Assume A limited and B limited under common control. So we have taken one assumption that they are under common control. Prepare balance sheet of A limited after business combination. Correct? So guys, first we need to calculate what? PC. For calculation of PC we want what? Calculation of intrinsic value of shares. Intrinsic value of shares. So A limited, B limited. Batao. Will you take goodwill in this? Will you take goodwill in this? Will you take goodwill in this? Yes or no? Goodwill is not coming in the balance sheet. Will you take goodwill in this? Once again you have not understood. If you are saying no, once again you have not understood. Dekho, I know where you will do mistake. Therefore I am asking you. Correct? Intrinsic value of shares means the formula is what? Fair value of business divided by what? Number of equity shares. But I will take book value of business ki fair value of business? Fair value of business including goodwill, excluding goodwill. But the PC is based on book value ki fair value? Fair value. So I am asking that only na. Why you are saying no? Why you are saying no? So it will be goodwill na. 2 lakh plus is 2 lakh and 2 lakh. So both are at 2 lakh, 2 lakh. Understood this point? Now they have given asset other than cash, what is the fair value le, book value le? We should take fair value or book value? Fair value. They have given what, 18 lakh and 9 lakh. Then cash will come. Cash how much given? 2 lakh and 1 lakh. Then liability given how much? It is 2 lakh and 2 lakh. What is the value of business? What is the value of business? 20 lakh and 10 lakh. Divided by what? Number of equity shares. Number of equity shares how much? 15 ki 50? 50,000 and 20,000. What is the intrinsic value? 40 and 50 na 50. Understood. Now we'll find out PC. So here A limited absorb what? B limited. So PC will be the number of shares. What is the number of shares? 20,000 into 50 by 40. So how many shares will be issued? Batao. 20,000 into 50 divided by 40. How much? 25,000. So 25,000 will be exchanged in exchange of this equity share based on the fair value business into what? 40. So PC become what? 10 lakh. 10 lakh. Now I'll pass journal entry. Batao. All asset will come at which value? Asset will come at book value na. So now book value. Book value is coming how much? It is 8 lakh and cash how much? Sorry, 8 lakh uska le liya. Sorry, B limited ka. B limited ka asset how much? 5 lakh. 5 lakh and cash how much? Where the goodwill will come? But goodwill will come. Yes, it will come. But at which value? Which value? Book value na. Book value is what? Nil. I am just writing to inform you that if goodwill is coming in the balance sheet, that goodwill will come. So all asset, all liability including goodwill will come at what? Book value. So if I am saying goodwill will not come, you will think it will never come. It will come at which value? Book value. Understood? To liability. Liability how much? 2 lakh, 1 lakh. 2 lakh. And PC, equity share capital will come. Equity share capital how much? 25,000 into 10 means 2,50,000. And securities premium will be how much? 7,50,000. Reserve and surplus need to be also maintained. So reserve and surplus will come. How much reserve and surplus given? So that will be also maintained. And the difference will be transferred to what? Capital reserve. So I think capital reserve will be negative how much? 8 lakh. Check karo. It will come negative 8 lakh. And this capital reserve is nothing but difference between what? Share capital of the transfer company how much? Share capital how much given? Good. And PC is how much? PC is 10 lakh. The difference is what? 8 lakh. So automatically this 8 lakh will be difference. And that will be transferred to what? Capital reserve negative. Understood? This is the entire pooling of interest method. Pooling of interest method. Understood? Any doubt? Simple. Simple. Now this topic is over. Only one question I think given that you can do by your own. That is also very simple question. But any doubt in this? No doubt. Simple. Now coming demerger. Now what do you mean by demerger? Demerger means what? there will be one company which is known as demerged company, existing company, and suppose they have multiple business 1, business 2. So one of the business will be transferred to what? A newly formed company, that will be known as resultant company. Resultant company, and this will be known as what? Demerged company. Understood? Now, so can I say from this chapter point of view, it become acquirer, and this become acquiry. So in this case, PC will be paid by acquirer, not to acquiry. The PC will be discharged in the form of equity shares to the shareholders of what? To the shareholders of demerged company. Means with this process what happens? The shareholders of demerged company will also become shareholders of resulted company without any investment. This entire process is known as what? Demerger. So whenever in the question they mention that PC is discharged to the members of demerged company, it means it is a question of what? Demerger. It means it is a question of demerger. Chalega? Yes, sir. Now can I say, just try to understand, if I say in this way, if this is a demerged company and this is a resultant company, and one of the member of these control this company, so if suppose they are holding 70%, so they will get 70% equity shares of what? Resultant company also. So ultimately what happened, before and after business combination, both the business were ultimately controlled by same party, so that become demerger under common control. Therefore, can I say in this book, Appendix C to IND AS 103 will be applicable. Appendix C to IND AS 103 will be applicable. Understood? But if I say in this way, there is demerged company and this is resulted company, and there was no party controlling what? This company. There were many shareholders, but it was not under any control. It was not under any control. Quite possible. They were shareholders, but no single party or an organized group of party under a contractual agreement does not control what? Demerged company. Quite possible. So they will get proportionate share. So in this case, here also no control. Ultimately, this become demerger, not under common control. Therefore, in the books of acquirer, IND AS 103 will be applicable. Means in this case, acquisition method will be applicable. In this case, pooling of interest method will be applicable. However, in ICAI book, no question of this nature has been given. So they have given two questions, and both the questions solution has been done in this way. Understood? Are we able to understand? So from exam point of view, we think that always whenever question is silent for this particular topic, you should assume that it is demerger under common control. However, you only think, suppose they have given one question like this. It is a two company, demerged company, resulted company, and nothing has been mentioned about what? Control. So basic assumption should be what? Not under common control. Because how can we understood they are under common control? Are you able to understand what I am saying? If suppose they are not under common control, abhi question is silent. They are saying what? This is a demerged company, this is resultant company. A question is silent. What you should assume? Not under common control. But then so solution is given as per which assumption? Under common control. So from exam point of view, however, no question of this nature given, so higher probability they will ask this only. But suppose they ask this, you should react in that way. So I'll just give you one simple point from exam point of view. If question is silent about demerger, the following assumptions should prevail. This is actually from this assumption I am writing from exam point of view. This assumption I am writing from exam point of view. Practically, you need to think about the facts and circumstances. Correct. So if question is silent and assets and liabilities are taken over taken over at book value. We will assume it is business combination under common control. This will be business combination under common control. Are you getting what I am saying? Means they have not given any information about fair value. We will assume it is what? Business combination under common control. But suppose they have given this way, कि assets and liability are taken over at fair value, or fair value information is given the question, then if you are assuming this, so that will be wrong from examination point of view also. Then it should be business combination not under common control. When I am saying if question is silent, it means what? Means they have not mentioned any information about particular shareholders. Suppose they have written Mr. X is controlling demerged company, then question is not silent. Question is not silent. Question specifies some point. Then don't apply this assumption. So this assumption will be applied only when question is silent. Chalega? Understood? Have you understood? So we'll focus on one question of this nature, because normally they will ask this only in exam. Normally I am saying because they have not given a question of this nature. They have not given any question of this nature. So let me take one question, very simple question. It is, question 11. E Limited has two division, laptop and mobile. You can see laptop, mobile. Division laptop has been making a constant profit, while division mobile has been suffering losses. On 31st March 2002, division wise draft balance sheet is given. You can see balance sheet given division wise and total wise. Fixed asset depreciation, net asset, current asset, less current liability, total finance by loan fund, capital, equity, surplus. Now you only say whether capital and surplus means retained earning, whether it can be division wise. No. So it cannot be division wise. This is given only to confuse you. So don't consider this point. Don't consider this point, otherwise it will be mistake while preparing balance sheet. So equity and capital, equity and surplus means other equity cannot be division wise. So this is the total from entity's point of view. From entity's point of view. If you remember, you have done segment as operating segment. So there also we don't do segment wise equity and reserve and surplus. That will be always what? Entities wise. That will be always entity wise. Now division mobile along with assets and liability was sold for 25 crore. 25 crore become what? PC. To Turnaround Limited, a new company who allotted 1 crore equity shares of rupees 10 each at a premium of 15 per share to the members of E Limited, means to the shareholders of E Limited, means it is a question of what? Demerger. It is a question of demerger. In full settlement of the consideration in proportion to their shareholding in the company, one of the member of E Limited was holding what? 52% shares of the company. Means question is not silent. It is under common control. Therefore, after both the entities were under common control. Therefore, it is a question of business combination under common control. We will apply pooling of interest method. In whose books? E Limited or T Limited? In Turnaround Limited. So in the books of Turnaround Limited, because that is an acquirer, we will apply pooling of interest method. Assuming that there is no other transaction, you are asked to pass journal entry in the books of E Limited, prepare balance sheet and prepare balance sheet. So they have asked both balance sheet. This is very simple. Now my question to you all, what journal entry will do in the books of E Limited? Now for E Limited will apply which Ind AS? So for E Limited there is no Ind AS. Will do journal entry based on what? Generally acceptable accounting practice. This means we will de-recognize what? Assets and liability of mobile division. So what journal entry will do? Loan fund account debit at carrying amount, whatever has been transferred. Current liability will be de-recognized at carrying amount. Provision for depreciation will be de-recognized at carrying amount. Property plant equipment de-recognized at carrying amount. and current asset will be derecognized at carrying amount, and nothing is receivable from whom? T Limited, because T Limited paid consideration to whom? To the shareholders of this company. Nothing has been receivable. So the difference of these will be known as gain or loss on restructuring, and that gain or loss on restructuring will be transferred to capital reserve. So it will be transferred to what? Capital reserve. Only one journal entry. Done. Now suppose they ask you journal entry in the books of T Limited. What journal entry will do? Batao. Journal entry batao. They have not asked in this question. Suppose they ask. So it will be PP account debit what? What is the book value? You don't have question. PP account debit how much? It will be 500 minus what? 400. That is 100. Sorry, not mobile, na? Mobile. So it is what? 100. The current asset what? 500. 2. Current liability what? 400. Pakka. To loan fund what? 300. And to members of E Limited. PC is payable how much? 25. The difference will be what? The difference will be capital reserve. Because pooling of interest method, capital reserve is coming how much? Bata? 125. Debit or credit? So capital reserve will come debit 125. Then we'll pass one more journal entry. Members of E Limited account debit 25. To equity share capital at nominal value how much? 10. To securities premium how much? 15. These two journal entry will do. Understood? Have you understood? Now normally one doubt come with the student. Normally this doubt will come when you will apply for ज़्यादा सा knowledge. Sometimes we think much about a concept, and when your concept is strong, this type of doubt will come. Ki sir, when you said pooling of interest method, now pooling of interest method said all asset at what value? Book value correct only. All liability at what value? Book value correct only. PC is of course calculated given only. But can you say in this case we have not maintained what? Reserve and surplus of which company? E Limited. That doubt will come na. Ki why reserve and surplus? If you see, we have done previous question na. When I have done this question, I have written 2 reserve and surplus. The doubt will come, I am saying. If you know, then okay. This doubt may come or not. Last question we have done business combination under common control. We have written all asset at which value? All liability at which value? Equity share capital come at PC, and then we have maintained what? Reserve and surplus. But in this you can see we are not maintaining what? Reserve and surplus. Doubt will come or not? So actually what happened, just try to understand. In the last question, when I have done the question of business combination under common control, the transfer company was liquidated. But in this company Enterprise Limited is not liquidated. So already it is maintained what? In the books of E Limited. So if it is already maintained in the books of E Limited, can I say maintaining twice is not correct? Means it is already maintained यहाँ पर ना. Then there is no need to maintain again. There is no need to maintain again. Understood? Because this is already maintained in the books of E Limited. So there is no need to maintain again, and therefore that other equity will not come. Got this point? Correct? Yes, sir. Then we can prepare balance sheet. Balance sheet is very easy. Correct now. You can prepare balance sheet. So this type of question can be asked in exam. Already asked in one of the attempt. Whenever they want to ask 10 marks question or 12 marks question, they will give this question. Super easy. Super easy. Understood? I am not explaining. Do you want me to explain this also? This explanation I have done because already institute have question on this, but there is no question on this. Do you want me to explain this also? Business combination not under common control but demerger. चलो थोड़ा सा कर लेते हैं, because they will not ask. I know why they will not ask, because this is थोड़ा सा interesting, थोड़ा सा complicated, and therefore they will not ask. because they want to ask you what? Simple question. And that is a fact. There is no question on this because this is thoda sa interesting topic. What is the interesting part in this? Just try to understand. A limited, B limited, demerger हुआ, correct? And PC is paid to what? Shareholders. Same thing, but this is not under common control. Not under common control. So can you say for this B limited, so acquisition method will be applicable and 103 will be applicable. So there is no doubt about this. You can do journal entry in the books of B limited. You will do INA account debit at what? Fair value to cash or whatever is paid. PC will come, correct? And the difference will be what? Goodwill or gain on bargain purchase. This is super easy. You can do it. Or you can say two members, because PC is paid in the form of what? Equity share. So two members, you can write down two equity is PC, correct? The difference will be goodwill or gain or bargain purchase. So there is no doubt in the books of B limited. Doubt will come in the books of A limited. So what concept says? You can see they have transferred what? They have transferred what? Batao? They have transferred a business which is nothing but, can you say, they have transferred non-cash asset. Non-cash asset, na? They have transferred non-cash asset to whom? To a B limited, and B limited has given the benefit to whom? To the shareholders of what? A limited. So ultimately what happened? Just try to understand. Suppose I have given my mobile to you, correct? And the fair value of this mobile you have transferred to my shareholders only. So ultimately this is distribution of non-cash asset to the owner or not. So this is known as deemed distribution. This is known as deemed distribution. Therefore, in the books of A limited, we need to apply appendix A to IND AS 10. Whether I have done IND AS 10 with you? IND AS 10 करवाया आपको? हाँ? I have not done appendix A to IND AS 10. We have not done. So I will do there also. But I am just explaining this. For this we will apply appendix A to IND AS 10. Means this will be what? We need to pass one journal entry for deemed distribution. We need to pass one journal entry for deemed distribution. Correct? Means I am just giving the journal entry. Suppose they ask this question in exam. Suppose they say this is business combination, demerger not under common control. In the books of B, तो very easy. In the books of B, तो very easy. अरे बोलना रे. In the books of B, what you are applying? IND AS 103 की appendix C to IND AS 103. IND AS 103. Which method? Acquisition method. That we can do. Only just write down what journal entry you will do. यहाँ पर journal entry remains same. Only one difference. Journal entry what? All liability will be de-recognized. All liability will be de-recognized at carrying amount. All asset will be de-recognized at carrying amount. And the difference you will transfer means that difference will be what? Deemed dividend. Deemed dividend, and that will be debited to retained earning. Retained earning. So यहाँ पर it will not be transferred to capital reserve. It will be debited to what? Retained earning. Difference is this only. Correct? Difference is this only. वहाँ पे कहाँ transfer किए? Capital reserve. यहाँ पर कहाँ? Retained earning. Only this much. But you need to explain this by giving reference of what? Appendix A to IND AS 10. By giving reference to appendix A to IND AS 10. Correct. So I have just given a summarized compound journal entry from examination point of view, because I know that they will not ask you detailed point for this. Detailed discussion require more explanation, but I know what they will ask. They will ask only what journal entry, and the net effect of this transaction will be this only. So what you will do? Liability account debit to asset account at carrying amount, and the difference will be transferred to what? Retained earning. The difference will be transferred to retained earning. चलेगा? चलेगा. So difference I hope you have understood. यहाँ पर the difference was transferred वहाँ where? It was transferred to capital reserve. in this case similar journal entry pass and the difference will be transferred to retained earning. Bus this much. Understood? Correct. So quite possible they may ask this type of question when they have given that demerger is there and there is no control, and they have given that assets and liability are taken over at what? Fair value. Okay, sir? Yes, sir. So this also done. Demerger also done. Correct. Now let us come to, before going to some other questions, let us come to miscellaneous concept. There are some small points which you need to keep in your mind while doing any question about business combination. Small points are there. First point, business combination with no consideration. Already I have explained this point where when I was doing consolidation, sometimes control is obtained without paying any consideration. In that case, PC will be 0. We need to measure the previously held equity interest at fair value, then find out NCI, compare with fair value INA, and this will be goodwill or gain on bargain purchase. Even though you have not paid any consideration, then also apply what IND AS 103. Chalega. Then non-current asset held for sale of Enquiry. So what IND AS 103 says that if you have acquired some non-current asset held for sale or any disposal group held for sale of Enquiry, then do not recognize their fair value. Recognize that as per IND AS 105, means at carrying amount or fair value less cost of disposal on the date of acquisition, means as per IND AS 105. Means normally question with silent, so can you say acquiring company has already applied IND AS 105, so that will be at lower amount only. So will not recognize that fair value, we recognize that carrying amount only. Understood? This can be one important point where student can do mistake because they will give you additional information about fair value, so we need to ignore that. Then there is one concept of indemnification asset. Sometime what happens, whenever we have acquired whenever we have assumed your contingent liability. So suppose I have assumed your contingent liability and right now the fair value is 20 crore. But in future we may be supposed to pay 50 crore. Then what? Your liability we have taken over. Suppose one legal case was going on. Means as per the current valuation, as per the best estimate, right now the fair value is 20 crore. But actually we are supposed to pay 50 crore. So in that case, Enquiry gives some indemnification to us. Means as per the contractual agreement, they may indemnify if we are supposed to pay higher amount. So for that reason, what IND AS 103 says that you have some right to recover from Enquiry. So that right will become your indemnification asset, and that indemnification asset will recognize that fair value on the date of acquisition. Don't worry, fair value will be given in the question, but that fair value cannot be more than what? The liability assumed. Suppose they have given the liability assumed is 20 crore and the indemnification asset is what? 15 crore. Then okay, 20 and 15 will come. But suppose liability assumed is 20 crore and they have given fair value of indemnification asset 25 crore. Can we do that? No. Then it will be equal to what? 20 crore, means equal to the fair value of liability assumed. This also you have understood. Indemnification asset means from exam point of view, recognize that fair value of such asset on the date of acquisition, provided it should not be more than what? Fair value of liability assumed. Correct. Then lease. Till now no question of this nature have been asked in exam, or neither they have given in ICAI study material, but important from exam point of view. 100% they will insert this point someday. They will insert this point in some of the questions. So I need to explain this. See, there can be two situations. Suppose the Enquiry may be a lessee or maybe a lessor. So if he is a lessee, the first find out is lease is a short-term lease or lease of low value asset. Understood? If yes, then do not recognize ROU asset and lease liability on the date of acquisition and follow IND AS 116 from the date of acquisition. follow IND AS 116 from the date of acquisition. This lease ROE asset will not be recognized, lease liability will not be recognized. Simple. Now, if no, means normally in exam it will be no only, because this will be very easy now. But sometimes this can be also dangerous if you don't know the concept now, because in the books of Enquiry there will be some ROU asset, there will be some lease liability. Acha, short term lease, it's to be short term lease from the date of acquisition. On the date of acquisition means on the date of acquisition, if the lease term is 12 months or less than 12 months, it will be considered as what? Short term lease. Even though it was not a short term lease for what? Lessee. Even though it was not a short term lease for lessee. I hope you are understanding. Are you able to understand? Means Enquiry is lessee na. So for initial accounting it was not short term lease. But on the date of acquisition it become what? Short term lease, because remaining lease term was 12 months or less than 12 months. Understood? Correct. Now no, then of course you need to recognize lease liability. So lease liability will be present value of remaining lease payment on the date of acquisition as per the discount rate given in the question. As per the discount rate given in the question. And ROU asset will be equal to what? Lease liability. ROU asset will be equal to lease liability. Plus minus they have said. However, this plus minus is not important from exam point of view, because I know they will not go to that point. But let me explain that point also. Plus minus adjustment for what? Favorable and unfavorable condition for market. Plus market adjustment. Market adjustment. I'll explain this also. But have you understood this? I'll come to this point. Okay, this too you can calculate. And ROA asset will be equal to lease liability if this is not given. If this is not given. Normally it will not be given, I know. Then this lease liability will come in the balance sheet. And ROA asset will come in the balance sheet. And if the both amounts same, goodwill will not be affected. Goodwill will not be affected. Okay. Now if it is a lesser. So can you see in the books of lesser, either it was an operating lease or finance lease. If operating lease, so there was underlying asset. If finance lease, so it was a lease receivable. So this underlying asset will be recognized as fair value. Fair value. Lease receivable will be also recognized as fair value, and this will be equal to present value of remaining lease payment discounted at what? Whatever rate is given in the question. Discounted at whatever rate is given in the question. However, from exam point they will say, they will ask you lessee, they will not ask you lesser. They will not ask you lesser. Understood? Chalega. So this too you have understood now. Understood lessee? High probability they will ask. Means they will create a new question, they may give this point in business combination. Chalega? Yes sir, let me read. You can see acquirers recognize ROU asset and lease liability for the lease identified in accordance with IND AS 116. The acquirer is not required to recognize ROU asset and lease liability for lease which are short-term lease on the date of acquisition or lease for which underlying asset is of low value. Acquirer shall measure the lease liability at present value of remaining lease payment as if the acquired lease were a new lease on acquisition date. Means that discount rate will be given the question. Means they will give you incremental borrowing rate. So based on that incremental borrowing rate, calculate it. Acquirer shall measure ROU asset at the same amount as the lease liability, adjusted to reflect the favorable or unfavorable terms of the lease when compared with the market terms. We just try to understand that it is quite possible lease payment whatever is given is not at market term. So either lease payment will be equal to market term, then no adjustment required. But if lease payment is more than market terms, for the favorable, unfavorable, unfavorable now, it is unfavorable, or lease payment is less than what? Market term, then it becomes favorable. So for that some adjustment is required. So what they want to see, ROU assets should be based on market terms. Means this is not in market terms now. So lease liability will be as per contract. But ROU assets should come at market terms. So find out lease payment at market terms, and any adjustment should be done, means either plus or minus. Are you able to understand? Plus or minus. So of course they will not go to this, well, believe me, they will not go to this level. If they are started going to this level, means they want to kill you. Correct now. So 100% they will not ask this much. Suppose they have given, you have understood. You need to compare what this lease pay liability with the lease liability at market term and do that adjustment. Then of course the lease liability and ROE asset will be different. Lease liability and ROE asset will be different. Correct. So I will say ROE asset will be present value of lease payment at what? Market terms. In simple word. In simple word. So if both are same, no difference. If both are different, the difference will come. Difference will come and goodwill will be affected. Chalega? One minute. ROE asset for lesser कहाँ गया? Lessee. No, ये तो lesser है ना. In the books of lesser, ROE asset will never come. Here acquiry is the lesser. So acquirer also become lesser. Finance lease में lease receivable will come. Lease receivable, ROE asset कहाँ से आएगा? ROE asset in the books of lessee. ROE asset and lease liability in the books of lessee. Lease receivable in case of finance lease will come in the books of lessor. So there is no ROE asset there, na? Suppose I am the lessor. You acquire my company. Acquire करो. सब बोलो I will take over your company. In my books, whether there is any ROE asset, whether I have any control over the asset, I have only right to receive from what? Lessee. Now you have acquired my company, so now you have a right to receive from whom? Lessee. So where is the ROE asset? No ROE asset now. That is already recognized in my that is already recognized in my financial statement. So there is no ROE asset. Already that journal entry has been done now. So after some time you have acquired my company. So there is no ROE asset already de-recognized from my financial statement. Understood? Okay. Okay. Okay, sir. So I have just given stress to this point because there is no question and question can be asked from this point. Yes, sir. Then coming to assembled workforce, already I have asked one question and you have said also no, it is not an intangible asset because it will not meet the recognition or definition. Definition. It will not meet the definition of intangible asset. Therefore, assembled workforce will never be recognized. Will never be recognized. Then customer and subscription list. Suppose you have acquired my company, so I have a customer information, is your information or subscription list. So of course now it become your asset. So whether it can be recognized in your balance sheet? Well, yes, because it is separable. It can be separable. It will meet the definition of intangible asset. So it will be recognized in your books at fair value. At fair value. The customer and subscription list will meet the definition of intangible asset, therefore will be recognized in the financial statement of acquirer. But sometimes, suppose I have provided a customer list to you with one restriction that you cannot exchange this information to other party. It means it is non-separable. It cannot be transferred. In that case, it will not be recognized. In that case, it will not be recognized. But if question is silent, always recognized. So they have given one exception also. If you read this, you will be able to understand. If the customer is acquired in a business combination will not meet the separability criteria, if the terms of confidentiality or other agreement prohibit an entity from selling, leasing or otherwise exchanging information about its customer. Chalega. In process research and development project, it is very important. Till now not will be asked in exam. Not yet asked in exam. What they want to say? Suppose A Limited absorb B Limited and B Limited has some in-house research and development project. Until now they are into research stage. And suppose 100 lakh incurred. So but they will apply which Ind AS? Ind AS 38. As per Ind AS 38, what will do? It will be charged to PL account. Means in the balance sheet there is no intangible asset, but now it will be acquired. This research and development project will be acquired by whom? And it is a fair value of 120 lakh. Fair value of 120 lakh. The question is that whether they can recognize this in-house research project in their books. Yes, because it will not meet recognition criteria, but it will meet what? Definition: identifiable, non-monetary, without physical substance. Therefore, what Ind AS 103 says, yes, it will be recognized as in-house research project at what? 120 lakh. And now, subsequently, who will do expenditure? A limited. So they may incur research phase and subsequent phase expenditure. Suppose again they incur 20 lakh and 100 lakh on this, but on research phase, how much expenditure incur subsequently? Whether we can capitalize this? No, because now we'll apply what? Ind AS 38 on this, and on this development phase 100 lakh incurred, will you capitalize this? No, your answer is not correct. You are saying yes, na? Your answer is not correct. Well, yes, but when it meet recognition criteria, there are 6 conditions. So you need to find out that when they are meeting that 6 condition. So yes, we can recognize, but when 6 condition has been satisfied, correct? Now suppose the 6 conditions satisfied. So what will be the carrying amount of this in-house research and development project? 120 plus 100, it become 220 lakh. Can you say on this will apply impairment testing? Impairment testing will be applied as per Ind AS 36. It is quite possible recoverable amount may be less than this amount. Then impairment loss will be accounted as per Ind AS 36. 100% with MCQ तो पक्का this question will be asked. Because पहले there was no scope. Now there is a scope of this small question. All small point become what? Important from MCQ's point of view. चलेगा? Yes, sir. So that is only given, you can read. Reacquired right. Do you know about reacquired right? Reacquired right? Reacquired right. We suppose A limited, B limited. A limited has given some right to what? B limited. This right will become what? Intangible asset for B limited, because arises from contractual or legal right. For example, let us take one good example. Haldiram. Haldiram has given their franchisee to be limited. So this franchisee will become intangible asset for B limited, and they can use this the trade name, logo, brand, etc. of Haldiram for the 10 years. So of course they will charge some fees, and suppose they have charged 20 lakh franchisee fee. But in the books of A limited, which Ind AS will be applicable? In the books of B limited, which Ind AS? Ind AS 38. In the books of A limited, 115. Very good. 115. Already we have done franchisee intellectual property. Intellectual property, license of intellectual property. So that will be covered under Ind AS 115. So this 20 lakh will be recognized as per Ind AS 115. So right now we are not discussing about Ind AS 115. We are not discussing about Ind AS 38. We are discussing about what? Ind AS 103. Now suppose 5 year expired. So can you see in the books of B limited, now it will come at carrying amount. So 20 lakh amortization for 5 years, it will come at 10 lakh. So this becomes carrying amount of intangible asset in the books of B limited. Now after 5 years, what happened? A limited thought that, array, let us acquire B limited only. So now they are absorbing what? B limited. Quite possible B limited now is making a good profit with the name of what? Haldiram. So they will become greedy. They will try to absorb what? B limited. They will try to absorb B limited. So suppose they have acquired B limited. So of course, can I say all other assets and liability? There is no doubt about other assets and liability. This will come at what? Fair value. The question is that this intangible asset, whether it can be recognized in the books of A limited, because this is the right of what? A limited given to what? B limited. So A limited is reacquiring their own right. Reacquired right. Understood the topic? Reacquired right. So the question is that whether A limited will recognize their own right in their own financial statement. The topic have you understood? Why we are discussing this? Whether A limited will recognize their own right in their own balance sheet. Yes. At which value? Fair value. Fair value will be given. Correct. But this much was simple, but one extra point in this much no doubt, and I will say you will say yes only. You will say yes only, na? So reacquired right will be recognized in the financial statement of acquirer at fair value on the date of acquisition. But just try to understand, because A Limited has given the right, there was one cancellation clause. Due to that cancellation clause, if A Limited cancel the contract before what? 10 years, so A need to pay some settlement fee, या cancellation fee. So can you say there was some pre-existing contract, and because of that pre-existing contract, they need to pay some compensation to whom? B Limited, and of course they have paid some compensation for that also. So that become a separate transaction which is not a part of business combination transaction. So what Ind AS 103 say, that you need to calculate gain or loss on settlement of such contract, and that gain or loss on settlement of such contract will not be a part of business combination transaction, will be transferred to PL separately. So how to calculate a gain or loss, that we need to understand. Have you understood this point? Correct. So let me read what they have given. Okay. Acha. This reacquired right will be amortized in the books of A Limited for the remaining contractual period. Very good. Excellent. That is only given. A reacquired right is an identifiable intangible asset which should be recognized at fair value. Reacquired rights should be amortized during post-combination period on the basis of remaining contractual period of right. Any settlement gain or loss is recognized as a separate transaction which is not a part of business combination. How to calculate the gain or loss? So what they say, gain or loss will be lower of A and B. In simple word, A is equal to fair value minus carrying amount. A is equal to what? Fair value minus carrying amount. Fair value will be given, carrying amount you can calculate. Correct. And B is equal to what? B is equal to settlement price paid. That will be also given. So lower of these will be gain or loss on settlement. Lower of this will be gain or loss. Now if the lower is positive, it means loss. If the lower is negative, then it means what? Gain. If the lower is positive, positive means loss. One second. If the lower is positive, are you able to understand what I am saying? Amount is positive means. Okay. Suppose this is 3 lakh, this is 1 lakh, and this is 1 lakh. So this is coming 2, this is coming 1. Lower is what? 1. 1 is positive amount, negative amount. So this is what? Loss. But quite possible, this is 1, this is 2. Now it become minus 1 na. So which one is lower? Minus 1. So minus 1 become what? Gain. Minus 1 become gain. So I have just given one formula. Formula is what? A is equal to what? B is equal to what? If the lower is positive, positive means loss. If negative means gain. Understood? Correct. Now whatever PC you have calculated, we do adjustment for this. So settlement gain will be added and settlement loss will be deducted. Settlement gain will be added to the amount of PC and settlement loss will be deducted to the amount of PC. So this become PC for business combination. So this is the adjustment for separate transaction which is not a part of business combination transaction. So gain will be and loss will be deducted. Chalega. Only one question of this nature is given in ICAI study matter, that you do by rote, because I don't have that question right now. Chalega. This question can be also asked in MCQ. Till now not asked in exam. Okay sir, this also you have understood. Then business combination achieved by contract alone. This is, so I will say not important. Let me first come to this. Accounting for acquisition of interest in joint operation in separate and consolidated financial statement. We have done joint operation. Joint operation we have done now. For joint operation, what we have done? We have applied Ind AS 111. Ind AS 111. Correct. You remember joint operation? कि in the separate and consolidated financial statement of joint operator will recognize its asset including the asset which are jointly held, its liability including the liability which are jointly incurred. You remember that point? So now in combination of 103, what they want to say is, suppose you have acquired an interest either initially or subsequently. Suppose you have acquired an interest 20% interest in a joint operation. Suppose you acquired an interest 20% interest in a joint operation, and that joint operation constitute a business as defined under IND AS 103. As defined under IND AS 103. Understood what I am saying? Then IND AS 103 will be applicable in the books of joint operators to the extent of 20%. To the extent of 20%. One second. What they are saying, if you acquire 20% interest in a joint operation and joint operation meet the definition of business, then we come to IND AS 103. If it does not meet the definition of business, then do as what you have done under IND AS 111. Are you getting what I am saying? Correct. So in this case, what they are saying, then all INA will be recognized to the extent of 20% of fair value. 20% of fair value. बोला रे. To PC as per the amount paid, and the difference will be what? Goodwill or gain on bargain purchase. This will be the journal entry. So only to the extent of 20% will recognize. Very simple. Now suppose initially you acquire 20%. Now subsequently again you acquire 30%, quite 30%. Again you acquire 15%. And you have joint control. Of course you need to have joint control. Correct. So now again you need to pass journal entry INA of what? 15% of what? Fair value to what? PC. Whatever you have paid, this will be goodwill or gain or bargain purchase. And there is no need to remeasure the previously held equity interest. There is no need to remeasure the previously held equity interest. There is no need to remeasure the previously held equity interest. This is the concept. If you have understood this, so there is one question we can understand, because that is newly inserted question, can be asked in exam. Have you understood this? Correct. So, journal entry is very simple. Correct. Now let me take that question. This question. Question 18. Company X is engaged in the business of exploration and development of oil and gas blocks. So engage in the business of exploration and development. So understood, it is a business only, na? Company X currently hold participating interest of below mentioned producing block. So they are producing some blocks. They are into the manufacturing of blocks. Block name, Company X has 30%, Company Y has 60%, Company Z at 10%. For the above block, Company XYZ has entered into an unincorporated joint arrangement. But the unincorporated joint arrangement will be joint operation or joint venture. Unstructured joint arrangement will be always joint. Means can I say, if it is joint venture, then that topic is not applicable. Then apply IND AS 28. So this topic, whatever we are doing, this is applicable only to what? Joint operation, not to joint venture. Company Y is the operator of block. Company X and Z are the joint operators. Means they have a joint control. Company Y incur all the expenditure on behalf of joint venture. Question is not correct. Question is not correct. Actually, this question when initially introduced was having a lot of mistake. Then they have corrected it with some mistake. Understood? They corrected it, but still they have some mistake. So now we are just trying to understand the emotions of this question. So now they will again not correct it. They have already done their effort now. We will say, okay sir, we are happy with you. So actually this should be joint operation or joint venture. joint operation. So we read it as what? Joint operation. And raise cash call to the company and company jet at each month in respect of their share of expenditure incurred in the joint venture. Again, not correct. All the manpower requisite facilities, machineries owned by the joint venture and thereby owned by joint operator. वाह रे वाह 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 वाह, very good, very good, excellent. Understood? यहाँ पे joint venture, यहाँ joint operator. So joint venture में joint venturer. In joint operation we have joint operators. Mistake you understanding? चलो ठीक है, we'll understand the emotions. For past few months, due to liquidity issues, company jet defaulted in payment of cash call. Means both other party will bring cash only when demanded. Only when demanded. So past few months due to liquidity, company jet defaulted in payment of cash call to the operator. Therefore, company Y has issued notice to company jet for withdrawal of their participating right on 1/4. However, the company jet has filed the appeal with the arbitrator on 30/4/2001. कहानी बनाया है. Means this is story they have created. ठीक है ना. Financial performance of company jet has not been improved in subsequent months, and therefore company jet has decided to withdraw participating interest right from block and enter into a sale agreement with company X and company Y. As per terms of agreement dated 31st May 2001. This is the agreement date. Company Y will receive 33.33% and company Y will receive 66.67% share of participating interest owned by company jet. Means this is of how much percentage? 10%. So 1/3 of 10% will go to what? And 2/3 of 10% will go to Y. But this question we are doing from X point of view, Y point of view. No, X point of view. They have started with X. Story है ना, company X. So in company X there are some other parties also. So this question is from X point of view, not from Y point of view. चलेगा. However, with the flow of the question you will be able to understand. Company X is required to pay 1 lakh. So 1 lakh become what? PC. 1 lakh become PC. Against 33.33% share of PI, right owned by company jet. After signing the sale agreement, operator Y approached the government of India for modification in production sharing contract, that is removal of jet from PFC of block, and government has approved this transaction on 30th June. The approval was received on which date? Now we need to see whether approval is substantive or not substantive, whether it was required or not required. So that will depend upon this point. Government approval for the modification is essential given in the industry in which joint operator operate. Batao, date of acquisition will be 31st May or 30th June. If suppose this para was not given, it means approval might not be essential. It is only a legal formality. So if it is legal formality, then we'll apply substance of a form. Substance of a legal document, na? Then your date of acquisition would have been what? Because this is closing date. This is closing date. However, in this question, date of acquisition was 38th June. Now to confuse you, they have given company X balance sheet, company Z balance sheet on 2 dates. So this balance sheet is not at all important. Only this balance sheet is relevant. Chalega? Yes, sir. Then they have a big balance sheet. Okay? Then additional information. Fair value PP and development capital WIP owned by company Z as per the market participant approach is itna. Means fair value is given. So for other assets and liability, fair value will be equal to carrying amount. Fair value of all other assets and liability acquired are assumed to be their carrying value except cash and cash equivalent. Understood by cash and cash will be carrying amount only. But cash and cash equivalent are not to be acquired by company X as per terms of agreement. So cash and cash will not taken over. So not taken over, it will not come. Simple. Tax rate means what? Deferred tax. This is dangerous, huh? As per अब देखो, as per Ind AS 111, joint operation, whereby every operator record their share of assets and liability in their books. So now they are saying joint operation. It is a joint operation. First because joint venture, now reading it is a joint operation. So they are rectifying their mistake. Okay, sir. You need to determine first they have asked date of whether it will meet a definition of business. So just try to business. Abhi we'll do detailed discussion. So business means input process, and when process apply to the input, they must result in what? Output. So because in the question they have written producing block, so output is existing on the date of acquisition. So from the question, of course, they have a manpower, they have a machinery, output is also there. So no information given, always apply that, write on the definition and write on all conditions satisfied. That is a business. So if the question was not clear enough from a student point of view, you will be confused whenever this type of questions will come. Abhi to chalo, you have the answer, you understand, but in new question what you'll do? So you'll be stuck now. So whenever they have given some asset, they have given some process and output is there. So of course business na re. And if they are capable of generating what? Output, then also business. Just write on definition and conclude that yes, it is a business. Abhi will do detailed discussion also. So whenever a specific question asked, they will give entire point. They will give entire point. From that point you will be automatically understand. Correct. So this is a part of the question, quite possible you are confused in the exam whether it is a business acquisition or asset acquisition. So from the flow of the question, just write down definition of business and conclude yes, it is a business. Because after that they will write down, chalo IND AS 103 nahi likha, chalo okay. Sometimes they write down prepare balance sheet as per IND AS 103. It means it is a business. Correct, na? Understood point hai. Determine acquisition date. So acquisition date you can write down. What is the acquisition date? Past journal entry. Journal entry is very easy. Batao. All people come at which value? People come at which value? Book value, fair value. Book value, fair value. No one is saying. Fair value. Fair value. How much percentage? 33.33%. Means can I say these PP will come, but this 100% out of this how much acquired? 33.33%. Now one doubt will come. Dekho, 3 lakh ka 33.33% is how much? It is 99,990. But if you do 3 lakh ka 1/3, so what answer is coming? 1 lakh. Now difference of 10 rupees will come in your answer and ICAI solution. If you are taking this, how many of you are happy to do 1/3? You do 33.33%. 1/3 आया ना? अरे बोलना रे 33.33 1/3 है ना? 1/3 2/3 and that becomes थोड़ा more interesting because that is more accurate answer. Now बताओ, if you do 1 lakh, will you get marks? No, we don't know. That depends upon who is checking the paper. Believe me, totally depends. Means who is that fellow? Uska understanding level, we don't know na. Are you getting what I am saying? And suppose that day is his worst day. Quite possible la. Quite possible. If he is married, so every day is worst day. Just being I am also married, no baba no, ऐसा नहीं होता है. Just try to understand. देखो, they have done 33.33% के हिसाब से. They have done 33 means fair value का लेंगे. We'll take fair value का. I have taken, but they have taken 33.33%. When I have done this question for the first time, I have taken 1/3. So my answer and ICAI answer were not matching. So being a teacher also I have taken 1/3. Understood that? Rule is what? What is the rule? Rule is what? If they have given 33.33%, you can't apply 1/3. Rule is this. Rule samjho, rule. Rule have you understood? Of course you are correct if you are taking 1/3. I have also taken 1/3 only. Are you getting what I am saying? When I have done this question for the first time in my class without reading the solution. So in class I have taken 1/3 and I said, अच्छा यार ये क्या हो गया? Then I said to no, take 33.33% because in the question it is given what? 33.33%. The rule is what? Respect the information given in the question. Whether they can deduct or they will not deduct, will not fight on this. Of course, a good chartered accountant should not deduct. But you don't know. And if they are deducting, rule based deduction हो गया. Rule based deduction हो गया. Now if you want to fight, fight. कुछ नहीं होने वाला. Are you getting what I am saying? I am with you. If you come to me, I will say 100% wrong. 100% wrong. But what I want to say, normally the paper who is checking, they will follow suggested solution, and they will say, "अच्छा yeah." मतलब देखो, just try to understand. Are you getting what I am saying? ये हो सकता है. I am just warning you कि don't do that type of mistake in exam. One third means one third. 33.33% is 33.33%. Okay, sir. Okay. More rules I will say. Suppose normally one more thing. Suppose in question they have given all figure in crore. Like this figure given 140 crore like this. Whether in balance sheet, can you write down rupees in crore? Don't do. Why taking risk? Question बोला round up करो. You can do. But why you are doing? Why you are doing? देखो, just try to understand. I am doing without rounding off, but I will take more time or not? अरे बोलना रे. I will take more time means I have taken more minute than you. You are doing smart work. Smart work कर रहे हो ना. You are giving 1.0 करो लो. You are saving time. But the question says round off करो. बोला rounding off करो. अरे बोलना रे. Why you are doing rounding off? Respect the question. Once again, I don't know whether they will deduct or they will not deduct. If I am checking, I will not deduct, but I am not checking your paper now. The point is that why to take risk? Why to take risk? If they have given some figure full and some figure in crore, or balance sheet they have given in crore, then do in crore na. There is no rule for that. ICAI has not given any standard rule. But if you follow solution, they do as per the question. If in the balance sheet they have given in rounding off, then only they will do rounding off. Otherwise, they will not do rounding off. So don't take any risk. And how much minute you will save? 5 minutes only ना. क्या कर लोगे सेव करके when you are getting 0? देखो, once again, there is no rule for this. There is no, entire thing depends upon the person who is checking your paper. Believe me, they will say अच्छा rounding up कर दिया. Are you getting what I am saying? अच्छा, smart work, saving time. Come again. You don't know what is the mental status of that person. अरे बोलना रे, सिंपल ना. यहाँ पर पासिंग नहीं है, यहाँ पर सिलेक्शन है. दिस इज एग्जाम ऑफ सिलेक्शन ना. नॉट एबल टू अंडरस्टैंड. कितना भी इजी हो जाए, सपोज सुपर इजी क्वेश्चन पेपर, आई हैव गिवन सोल्यूशन ऑल्सो टू बिफोर एग्जाम. टुडे एग्जाम, टुडे सोल्यूशन given before exam, then also result is what? 20%. Understood what I am saying? तो यहाँ पे selection है, taking best among you. That you should keep in your mind. यहाँ passing तो है ही नहीं ना, यहाँ selection criteria है. Are you able to understand? And that you will also feel when you will become CA. सबको CA मत बना आप बोलोगे. Because more CA, less value. Yes or no? Why you are doing this course? पता है? Because there is a value in the market. There is a value in the market. If more CA will come, तो less value ना. अरे बोलना रे. So this same thing you will say when you will become CA. देखो, right now I am a teacher. So teacher is always with the student. But ask any practicing chartered accountant. मत बना रहे. Dilution, diluted earning per share. Got this point? Are we able to understand? And who is checking a paper? CA. Whether he is a teacher? No. Try to, this all ratio try to understand and then write in exam. Don't take any risk. Game is of 3 hours and you can complete 3 hours question paper by following the rules also. By following the rules also. Once again, I don't know whether they will deduct marks or not. So we'll not have a controversy on that. Correct now? There is no controversy on this. Your exam you decide. Okay, na? Ha. Can you use this PP etc.? Short form you can use. Short form में they don't deduct marks. I have seen the answer viewer. Amount में छेड़ा-छेड़ी मत कर. Means you can add on NCI, you can add on direct expense D भी चलेगा. वो तो चलेगा. देखा और पॉपुलर, अनपॉपुलर भी चलता है. पॉपुलर टर्म्स तो चलता है. Unpopular which is not used so much that also चलेगा. For example, you have written ना, give me business combination. So BC you can add on. Business under common contract. Because marks is not based on this. They will give marks. अच्छा amount is correct. Like this. They don't have time to see this also. Ha, meaning should be correct. What I have seen, they do not deduct marks on this. Once again, don't take this as word. Huh? Now I have said marks not given. Will file a case against me. मैं तो मर गया ना. चलो. But I am saying that if you want to do something, do with what? This short form. One more thing, main solution में try to write down full. Working note में जो करना है करो. Main solution, only main solution one part is there ना. There be थोड़ा सा what? Write everything. Because suppose they have asked balance sheet. अब now you are writing in this way. Balance sheet. देखो कैसे लिखते हो. Balance sheet of suppose they have given Reliance Industry Limited full name given. You are writing balance sheet of RIR low. Main solution is this. गलत बात है ना. Not correct ना. The main solution write down full. Only one time you are writing ना. हाँ, working note चलेगा. Just try to understand what I am saying. So if you want to play, play there. But don't play with the amount. Whatever they have given you. I am just explaining this because I have seen marks deduct होता है. Marks deduct होता है. For this. They will not give any information why they have deducted marks. But as per our experience, we understood marks has been deducted on that basis. They will say write, and they will deduct marks. You said no, everything is right. There are also marks not given. Many times I think you have also asked this question at CA inter level. Means if you have written your previous attempt, you have seen that everything is correct, but marks given what 2-3 marks deducted based on that reason. What is point? हो सकता है. So why to take risk? Risk मत लो. चलो. Now, so can I say this will be 30%, 33.33% of fair value. What was the fair value? Fair value was 5 lakh. 5 lakh का कितना है बताओ? Same amount is coming. So this will be 33.33% of carrying amount, and then you can calculate this. You can calculate this, but can I say because what is given? Tax rate is given. So you need to find out DT or DTL also. So that will be fair value of INA minus carrying amount of INA, either taxable or deductible, and calculate DT and DTL. Very simple. So they have given DTL. So of course there will be some taxable temporary difference. That working note is required. The difference will be goodwill or gain or bargain purchase. Only one journal entry. Then after that you can prepare directly balance sheet. Balance sheet is super easy. In the balance sheet X, only add all these amount. Now if you see the solution, देखो क्या किया? Journal entry they have given. This to working note was not required only. Why they have given this working note? I also don't know. Balance sheet of company X on 30. बकवास balance sheet. अच्छा, this is the main solution. Sorry, main solution. But main solution, अरे चुप रहना यार. In main solution में they have done pre-acquisition adjustment. Can this column is not required? You write down only post-acquisition ना. Because if they ask balance sheet, you write on pre-acquisition plus adjustment. That is not required. So I don't think so. Why they have given this? Directly you can write down this. Correct. Now in balance sheet working note, determination of company jet balance sheet acquired. This is bakwas balance sheet. Means no working note required. This is not required. Only what is required? Computation of goodwill or gain on bargain purchase that you can do. And one working note required for deferred tax liability. Then one note they have given about this note. This is also bakwas note. Just delete it. They have given note for India's 28. Actually, when they corrected a question, they forgot to delete that para. So this note is also bakwas. Just delete it because this is outside the topic only. Just delete it. Okay, sir. With this is question over, but this is expected question because initially there was some mistake. They have rectified it, and now high chances this question will come. It may come in your exam directly. Chalega. Done. So with this, almost all the points I have covered. Only what is left? Come to business definition. उसको भी कर लेते हैं. I'll come to that point also. पहले business definition आ जाए. Now, what they say about business? Let me first summarize. Business. We are doing to identify whether the acquired asset or means acquired group of assets and liability, whether it is a business or it is not a business. So first, what India say, you can apply a concentration test. Is concentration test applied? Now this concentration test is optional. Means either you may opt or you may not opt to apply it. So this concentration test is simplified approach to identify whether it is a business or it is not a business. So if, because it is an optional, it is not mandatory. So if opted, then you need to apply the concentration test, and if the test is passed, then it is not a business. Correct. And then do not apply Ind AS 103. If the test is failed, what is the test that I need to explain? Or if concentration test is not opted, either of these, in these both cases, apply general guidance of Ind AS 103. So what general guidance say that there is 3 minimum elements of any business. First is known as input, second is known as process, and third is what? Ability to generate output. So if these 3 elements exist, then if do not exist, then so it is not a business. If exist, then you need to find out whether acquired process is substantive. So we need to now understand when acquired process will be substantive. If it is yes, means if the answer is no, it is not substantive, then it is not a business. If the answer is yes, then it become what? A business acquisition. Means whenever questions come for business, so this become a process. First see whether concentration test is applied, opted. If yes, then apply the test. What is the test? We'll discuss. If the test is passed, it is not a business. If the test is failed or entity do not opt for concentration test, then apply general guidance given under Ind AS 103. So you need to identify whether that acquired process, acquired group of assets and liability consists of input, process, and when process applied to the input, whether they are capable of generating output. If this do not exist, it is not a business. If exists, they need to find out whether the acquired process is substantive So they have given some condition that we need to find out. And if yes, condition satisfied, then it is a business, otherwise it is not a business. So actually this is important. The question will be based on this, or question will be based on what? Concentration test. So I am expecting they may give MCQ based question for concentration test. MCQ based question for concentration test. Okay, na? I'm expecting that. So what they are saying? Optional test, the concentration test to permit a simplified assessment whether an acquired set of activities and asset is not a business. So what is the concentration test? What they want to say? You need to compare. You need to compare the fair value of gross asset acquired. The fair value of gross asset acquired with fair value of either single identifiable asset or group of similar identifiable assets. Now, what is the meaning of fair value of gross asset acquired? I will explain. But just try to understand. Fair value of gross asset acquired is nothing but substantial PC. Substantial PC. Suppose I have paid 1000 crore to you, and out for that act means whatever I have paid, that is for acquisition of one asset, and one of the asset whatever we have acquired that has a value of 9,900 crore. It means whatever I am paying is concentrated to that single asset. It means it is an acquisition of asset, it is not an acquisition of business. Or it is quite possible I have acquired a group of similar asset, and in that case also whatever you are paying, that is concentrated to what? Group of similar asset. So it is not a business acquisition, it will be considered as an asset acquisition. So what they want to say, the concentration test is satisfied if substantially, from examination point of view, it is 90% or more than equal to 90%. From examination point of view, practically depends upon the facts and circumstances. If substantially it is 90% or more than 90% of substantially all the fair value of gross asset acquired is concentrated on a single identifiable asset or group of similar identifiable assets. So now we need to understand what is the meaning of fair value of gross asset acquired. So they have given one formula to calculate fair value of gross asset acquired. To memorize this formula, I always say in this way. Batao. What is the formula? Formula is what? PC plus NCI plus previously held equity interest minus INA, fair value by INA is equal to goodwill. This is the formula, na? Correct. Understood. So can I do in this way? PC plus NCI plus equity interest minus asset minus plus liability is equal to goodwill, because minus asset minus liability, minus become plus. Correct. Then can I do in this way? PC plus NCI plus equity interest plus liability is equal to goodwill plus asset. Now this asset consists of cash and cash equivalent, DTA, and there are some goodwill which is because of DTL. Means if DTL will come, the goodwill will increase or not. So because of DTL, there is some goodwill. So goodwill due to the effect of DTL. When you are acquiring any business, so you are not acquiring this. So you are not paying any consideration for this. You are not paying any consideration for this. So the formula become like this: PC plus NCI plus equity interest plus liability minus cash and cash equivalent plus DTA plus goodwill due to what? DTL is equal to what? Goodwill plus remaining asset. And this liability will be also including DTL. So that DTL should be also excluded. So this liability will be what? Excluding what? DTL. So what is the formula? Either this is the formula or this is the formula. The formula become what? Fair value of consideration paid plus fair value of NCI plus fair value of previously held equity interest plus liability excluding DTA minus what? Cash and cash equivalent plus DTA plus goodwill arising because of DTA. फिर से बोलो बताओ. PC means what? Fair value of consideration paid plus fair value of NCI plus fair value of previously held equity plus all the liability assumed excluding DTA minus what? Cash and cash equivalent minus DTA minus goodwill arising because of DTA. So this becomes fair value of gross asset acquired. Or can I say it is equal to remaining asset? Remaining asset means asset excluding what? DTA and cash equivalent plus goodwill. Understood? Correct. So normally in exam we'll follow this. But if they have not given information about this, so we can calculate in this way also. So there are two ways to calculate fair value of gross asset acquired. Fair value of consideration transferred plus the fair value of NCI plus the fair value of any previously held equity interest plus the fair value liability assumed excluding what? DTL minus following item cash and cash equivalent DTA goodwill resulting from the effect of DTL. This becomes fair value of gross asset acquired. Now compare this with what? Either fair value of single asset or fair value of similar gross asset acquired. If that is 90% or more than 90% means it is not a business acquisition, then it will be a asset acquisition. Do not apply. So if condition is failed, then go to general guidelines. The same thing, fair value of identifiable asset excluding cash and DTA, then calculate goodwill. How to calculate goodwill? We have done in what? This chapter only. So this become goodwill. This two equal to what? Fair value of gross asset acquired. But this will be used only when in exam they have not given direct information. Got this point? So always prefer this in exam. Prefer this formula in exam. Correct. Then general guidelines. If the concentration test failed or entity opt not to apply the concentration test, entity need to consider the minimum requirement to meet the definition of business and if the acquired process is substantive. So what is the minimum requirement? Minimum requirement is input substantive process that can collectively significantly contribute to the creation of output. Can you write down this exactly in exam? Input substantive process that can collectively significantly contribute to the creation of output. Bolo, that can collectively significantly contribute to the creation of output. Bhul gaya likhna, that has an ability to generate output. Simple word. Life is also simple. So there is no need to write down this. But if you can memorize and write, okay na. Memorization is a kala. Kala means art. Memorization is an art. So if you have that art, apply that to score more marks. Normally what we say ki there is a difficult to score in what? Theoretical paper. But those who have this kala, art of memorization, they will score good marks in what? So of course, if they are writing exactly what is given in act, so they will score more now. But we are happy with 50% now. We don't want 90%. We are happy with what? 50%. So 50% means there is no need to memorize. Write down in your own words, but the meaning should remain same. Now elements of business, input, process, they have written, output that you can write down. Now the next point what is important is the acquired process substantive. So I am expecting this question also. They may give a case study based question now, and in that case study based question they will ask MCQ question whether it is a business or it is not a business. Correct? So in that case they may give this condition, you need to apply that. So there are two situations. First, whether output was not existing on the date of acquisition, means the set of activity in asset does not have output on acquisition date, means there was no output on acquisition date, means output will be generated in future. So there was no output on acquisition date. So in that case what they are saying, an acquired process or a group of process acquired shall be considered substantive if two conditions are satisfied. First, if process is critical. Process is critical. Critical means essential for developing that output. So always this condition will be deemed to be satisfied in question if question is silent. So how can we understand process is critical or not critical? they have given one process and nothing is given, we'll assume what? It's critical only, it is essential only. So if nothing is given, normally 90% nothing will be given. The process is critical. What is the keyword? Process is critical. The second condition is more important. The input acquired means whatever you have acquired include both an organized skilled workforce and other input which organized skilled workforce will convert into output. Means you have also acquired what? Organized skilled workforce employee of Enquiry. Means you have taken all the skilled employee of what? Enquiry. If you have acquired that, it means it is what? Substantive process. So just see the question. If there was no output on acquisition date, whether employee has been acquired or not. If employee acquired means process is substantive. So this become the keyword. Organized skilled workforce. Understood? Both the conditions satisfied, then process is substantive. Okay. Second situation, when output is existing on acquisition date, means already output was produced. Correct? Understood? So output was existing on acquisition date. So they have given two conditions. But if one of the conditions satisfied, it become what? Substantive process. First A, process is critical. One second, process is critical. Correct? So that will be deemed to be satisfied. Deemed to be satisfied. And input acquired include what? Organized skill. For similar condition. Similar condition. The process is critical and input acquired include what? Organized skilled workforce. Understood? Or they have given one more condition. The process is considered unique or very rare. It is a very rare process. Unique process. It is very rare. Understood? So process is unique or scarce, so cannot be replaced without significant cost with any other process. Means can I say, if the process is unique and it cannot be replaced, even though you have not acquired employee, then also it will be what? Substantive process. So in that case, question will write down it is a unique process. It is not available easily in the market. So if that is given, it means it become a unique process, or it cannot be replaced with any other process. So even though you have not acquired skilled employee, then also the process will be substantive. Chalega? Yes sir. Done. Business definition also done. Last wala point is not so much important. Chalo padhai do. Now, business combination achieved by contract alone. Only one illustration of this nature has been given. What happens? Sometime I'll just explain with one example. Suppose there are two companies, A Limited, B Limited. This is a listed company, this is also listed company. Correct? Now they want to join together. They need to form a new company, AB Limited. And this AB Limited, they need to once again go for listing. Once again listing fees we need to pay. So it will be an expensive method. So what they will say? Will not liquidate. Will form a dual listed corporation without liquidating these two companies. And there is no need to list it again, because already A Limited and B Limited are listed. So they will form one imaginary, I will say only by contract one company will form dual listed corporation. Are you getting what I am saying? In the contract, in this board of directors, suppose this has 6 members and this has 4 members. So bata who is dominating? So this become accounting acquirer, this become accounting acquiry. So it means this company got control over this company. So Ind AS 103 will be applicable in the books of A Limited. Understood? So how to calculate goodwill or gain or bargain purchase we are discussing. But you only say this business combination achieved through contract alone. The topic is what? Achieved only because of contract. But what is the PC? Nil na, bolo nil. I have not given any amount na. PC is nil or not? Because only contract one imaginary company has been formed in which 6 director and 4 director came. and though there is no consideration paid, means they have not acquired any equity interest of B Limited. Correct. What will be NCI? Can you say NCI will be the this entire 100%? Bole yes or no? NCI will be entire 100% or not? A Limited got control over B Limited without acquiring any equity interest. Without acquiring any equity interest, now this DLC is managed by whom? Without paying any consideration. So this entire equity interest become NCI or not? Now I am asking only one question. Apply your common sense. 100% हो गया ना, 100% NCI. Now they will give you fair value of business and fair value of INA. Suppose they give him fair value of business 1 lakh and INA is 90,000. So 10,000 is what? 10,000 is what? Goodwill. 10,000 goodwill na? Business, fair value of business means including goodwill. If I have given fair value of INA, the difference is what? Goodwill. Now, so can I say now will not do NCI, but the fair value method, what amount will come? 1 lakh will come, 90,000 will come. Huh? Fair value. The fair value na? Fair value means full value. Fair value, correct value. That is only full goodwill na? बोलना है yes or no? So 1 lakh will come. But if Pasina method then? So Pasina method 90,000. I am giving both the case. Now बताओ, fair value of INA will be what? In this case, first case, second case, 90. So only in first case goodwill will come how much? Second case it will be what? 0. This is the calculation. So they may ask this type of question because one question of this nature is given the illustration. You know, don't know when they are asking this type of question. Done. With my all the points, my discussion to over, all point discussion over. Question can I say in this chapter, question so it is your practice. Practice. All the question if I am doing, if I am not doing, that will not help you. You need to practice because conceptually once you are strong, all question you can do by your own. So in this chapter normally I will say you need to have good practice. Writing speed. Writing speed. How you are writing. You should know the flow. Flow of writing. Flow of writing. Right. So I will say I'll just give you step whenever questions come. So what you should think. First think about identify. Think about identify accounting acquirer. Normally, if it is a question of formation of subsidiary etc., this is also no need to identify. First identify this. Then think about date of acquisition. This is also very simple. That will be directly given the question. Then do calculation of PC. Calculation of PC. After this, do calculation of PC as per the information given the question. As per the information given the question. PC payment as per examination concern, I will say it will be cash payment plus fair value of equity shares issued plus fair value of deferred consideration plus fair value of contingent consideration. Normally they give this only. So this sum total will be what? There will be some in one of the question they have given SBP award also. It will be fair value of replaced SBP award. Now present value is nothing but fair value na. Deferred consideration means present value. Present value is nothing but fair value. One of the way to find out fair value is present value. Present value is not fair value. Present value is also fair value na. Present value technique is one of the present value is a technique to find out what? Fair value only. Once again lack of concept. The lack of concept. If I'm writing fair value, and fair value is nothing but present value only. ठीक है? Understood. But present value you can calculate. Therefore, I said always calculate. But contingent liability fair value we can't calculate. If not given, assume what? Nil. Are you able to understand what I am saying? So this you can calculate, but this fair value you can't calculate if not given the question. Therefore, assume nil if not given the question. Calculation piece is simple. Correct. Then I will suggest you. My suggestion is what? Normally in this chapter you find difficulty in identifying the account. So my suggestion is that if you are not so much expert, if you are expert, good. If you are not expert, so just think about journal entry in separate financial statement. My suggestion is this. So first pass one journal entry investment account debit with the amount of PC in separate financial statement. In separate financial statement. 2, can I say cash will come? So this will decrease cash in consolidated financial statement. Otherwise you will forget this. 2, equity share capital will come with nominal value. 2, securities premium will come with balance sheet figure. 2, can I say deferred liability will come? Deferred liability. This will be shown under borrowing in the balance sheet. Depending upon current and non-current. Depending upon current and non-current. Deferred liability. 2, CC will come. So it can be either equity or financial liability. It can be equity or financial liability. Equity means it will go to other equity. If it is classified as equity, then it will go to other equity in the balance sheet. If it is financial liability, it will go to financial liability in the balance sheet. Understood? And then 2 SBP reserve. 2 SBP reserve. So I will suggest you pass this journal entry. So then you will be able to understand what amount will come in balance sheet. Where it will come. Understood? Normally we don't pass this journal entry, so you will do mistake in what balance sheet and your balance sheet will not tell you and you will become emotionally hurted. Emotionally pain होगा ना? समझ गए? Journal entry. So this is my suggestion to avoid mistake. बोलो कुछ doubt है? Deferred liability. To deferred liability. Then to contingent consideration. It can be equity, it can be financial liability depending upon the question. If question is silent, then what? Financial liability. Nothing is given, financial liability. Correct? D हो गया. चले? So calculate PC then D. Then point number B, calculate deferred tax if any. Calculation of deferred tax and fair value of IND. I will say do together this. There is no need to do separate working note. So in this first find out fair value, then find out tax base, then find out taxable temporary difference. This will be as per the information given in the question. Find out asset, then liability, and this will be what? Difference. Correct? Understood? If question is silent about tax base, assume equal to what? Carrying amount. Assume equal to carrying amount. If tax base given, thank you very much. Not given, then equal to what? Carrying amount. Got this point? Means if you follow this, na flow आएगा. But there should be one flow. कि after this what? After this what? In that flow, practice चाहिए. Have you done this? Now, in this, be careful about contingent liability assumed. Normally, we miss that. Contingent liability assumed. Because contingent liability will not be in the balance sheet, that will be an additional information you might forget. Understood? And for this asset, be careful about two assets. One is indemnification asset. Write indemnification, don't write intangible asset. Indemnification asset and self-generated intangible asset, for example brand, etc., because that will also not be in the balance sheet of what? Acquiry. So that will also come. So be careful about that 2 points. Understood this point? These 2 points have been understood. Then I think you can calculate DTL. Means if it is taxable temporary difference, or it can be deductible temporary difference. That too you know now when it will be taxable and when it will be deductible. Okay, then you calculate DTL or DTA as the case may be. And after these two, this minus this will be what? Fair value of INA. Fair value of INA. Understood? Have you understood? Then after do this F working note, calculation of what? Goodwill or gain on bargain purchase. In this two you are super. Same formula write down. That working note you can do. Correct. Then calculation of remeasurement gain. A loss for previously held what? Equity interest. So this will be fair value given in the question. Compare with the carrying amount. This will be gain or loss if nothing is given, transfer to what? PL. If suppose they have said it was previously measured at FBT OCI, then it will be transferred to OCI. This become what? Remeasurement gain or loss. Then prepare balance sheet. Consolidated balance sheet. बना लो. Correct. I will say mostly this is the only flow. Mostly. But if it is a question of reverse acquisition, थोड़ा सा be careful. If it is a question of business combination under common control, then it is totally different topic. Understood? But if they ask a simple method, only a simple acquisition, then this is the flow of what? Solution. Got this point? With this, IND AS 103 is completed from my point of view. ठीक है? Oh my god. Now, IND AS 113 is left. I will take after break. And there is one more chapter, conceptual framework. Conceptual framework, nothing to revise from my point of view, because that is totally theoretical chapter. I think you also know that point. That is my role is very less. Zero role. But in that there is one topic, concept of capital, that I will do. Concept of capital, that I will do. Only the last topic, last point is there, one concept of capital, that is thoda sa related to practical question. So that I will do. Balance is totally theory. So that my job is nil. You read, you need to memorize. What I will do. 113 I will do, but after a break. We will take a break. 10-minute break, okay? Now, can we start once again, everyone? So let us come to very simple topic 113 fair value measurement. This chapter, once again, from exam point of view, is based on the question whatever is given in ICAI study material. So from my point of view, they will not create a new question in exam. They will ask the question whatever is given in ICAI study material, because we are not good in valuation. When I am coming to FR, so FR does not mean valuation. Valuation is what AFM part. So normally in this chapter, if they ask a practical question, so you need to apply the concept of what? AFM only. You need to apply the concept of AFM. So any question, if you apply common sense or valuation technique, whatever you have done where? In AFM, you will get the solution. From the content point of view, you need to understand some point if they ask MCQ based question. So what is the scope of this chapter? The scope is what to define fair value. What actually is the meaning of fair value? To set a framework for measurement of fair value in a single India. Because you can see from the beginning, wherever whichever India we are doing, we are referring the term fair value. So instead of giving fair value definition in each India, they have given fair value definition in India's 113 and the measurement principle. Then required disclosure about a fair value measurement. So what is the scope of this chapter? This chapter does not deal for the measurement date. It does not deal when to measure fair value. So when to measure fair value is based on the respective Indias. For example, right now we have done business combination. So fair value measurement date will be the date of acquisition as per Indias 103. So what is the date of measurement? That will be as per respective Indias. So this only deals with how to measure, and that also if the respective Indias is silent regarding the measurement principle. For example, we have done share based payment Indias 102. In that case, fair value of option is calculated as per the requirement given under Indias 102 only. Therefore, for that fair value, Indias 113 is not applicable. It means if not covered under respective Indias, then only Indias 113 is applicable. Chalega. So this becomes the scope of Indias 113. So it means Indias 113 is not applicable to Indias 102 share based payment. It is not applicable to Indias 2 for the calculation of NRV. It is not applicable to Indias 116 for the measurement of lease liability and ROU asset. It is not applicable to Indias 36 for value in use, to the extent of value in use. Of course, for fair value, less disposal of cost of disposal, Indias 113 is applicable. It is applicable to Indias 105 fair value measurement, Indias 109, Indias 16, Indias 38, Indias 103, Indias 41, etc. Chalega. Now what is the meaning of fair value? Simple meaning, fair value is what? A price. But which price? Exit price. Now whenever we say valuation, the price is based on two way. One is known as entry price, one is known as exit price. So when I say exit, exit means from the point of view of sale. Entry price means from the point of view of what? Purchase. From the point of view of purchase. For example, if I want to find out a fair value of this mobile, so I can say at what price it can be purchased in the market. That become entry price. Or I can say at what price it can be sold in the market. That become exit price. So fair value is based on which price? Exit price. That would be received to sell an asset, or that would be paid to transfer a liability in an orderly transaction between market participant on measurement date under current market condition. Means it is totally based on which condition? Market condition. Totally based on market condition. So it is not based on entities condition. It is not based on entities condition. So what India's 113 says that to find out fair value, we should ignore all the entities condition, but we should consider the asset or liability specific condition. Asset or liability specific condition, but if there is some restriction based on entities condition, we should not consider that for the fair value measurement. For example, simple example I will take. Suppose there is a car, and that car is a private car, means it cannot be used for public transportation. It cannot be used for public transportation. So it is an entity specific restriction, the asset is specific restriction. So it will be considered for the measurement of fair value for the car. But suppose entity has put one restriction that it will be used only to carry employee. It cannot be used for any other purpose. This become what? Entity's specific restriction. This will not be considered for the fair value measurement. Let me take one more example. Suppose we have a land, a vacant land. An entity has decided will not use for any other purpose. It will be only given for parking purpose. Correct now. So this become what? Entity's restriction. But can I say it can be used in the market for any other purpose also? Suppose it is a industry, it is in the industry area, so it can be used for industry development. Correct now. So that become what? Asset nature. So that will be referred for calculation of what? For measurement of fair value. But it is vacant used for parking purpose. That become asset. Entity specific condition that will not be considered for the fair value measurement. Then unit of account. So what Ind AS 113 says that when we do fair value measurement, so actually we want unit. Unit means what? What will be the number of item? Number of item unit. Then multiplied by what? Fair value per unit. Now whether this unit will be individual asset or group of asset, that will depend upon respective Ind AS. So Ind AS 113 will not decide about unit of account. Ind AS 113 will not decide about unit of account. It will only give you a fair value per unit. So who will decide about unit of measurement? Respective Ind AS. For example, in case of business combination, when you are acquiring group of asset, so that group of asset will become unit of account. Correct. Or let me take example of Ind AS 36 when we do impairment testing. So can I say if there is an individual asset, so we want to find out fair value of individual asset. But if there is a CGU, so we need to find out group of assets, CGU fair value. So it will be the unit of account is totally based on respective Ind AS. Now coming to the next point about transaction. So what Ind AS 113 says that all the transaction will be carried on, is deemed to be carried on two market. One is known as what? Principal market, or second is most advantageous market. If principal market cannot be identified, means either you need to find out what? Principal market, or you need to find out what? Most advantageous market if principal market cannot be identified. So what do you mean by principal market? Principal market is that market where we enter into large volume of transactions, that become principal market. Normally principal market is nothing but most advantageous market. But sometimes what happens, suppose we have two markets. Suppose for example I am teaching in Hyderabad as well as in Bangalore. So I have two markets. Now normally I teach in what? Hyderabad face to face. So that become my principal market. But suppose 50% classes I am taking here, 50% classes I am taking there. So both become principal market. So out of that we need to find out which one is most advantageous market. Means in which market I am getting higher fees. In which market I am getting higher fees, that will become what? Most advantageous market. So whenever you are not able to identify what? Principal market, then identify what? Most advantageous market. Now this is important. What they want to say, whenever you want to calculate fair value, so how to calculate fair value? First find out market price. Then from this we deduct two costs. One is known as transportation cost, one is known as transaction cost. So to determine fair value, we deduct only what? Transportation cost. Will not deduct what? Transaction cost. So this become fair value. This become fair value. And when you deduct transaction cost, so this become fair value less cost to sell. Transaction cost, this become fair value less cost to sell. So right now we are calculating fair value. We are not calculating fair value less cost to sell. So only deduct what? Transportation cost. Do not deduct transaction cost. But when you are identifying most advantageous price, then deduct both. So to find out most advantageous price, we should deduct what? Both. Understood? Correct. For example, let me give you one example. Suppose they have given two market. One is Hyderabad market, one is Bangalore market. And they have given market price 100 rupees, 120 rupees. They have given transportation cost, suppose 5 rupees, 6 rupees. They have given transaction cost, suppose 7 rupees, 8 rupees. मान लो, ठीक है? Correct. Now, if Hyderabad market is principal market, so bata what is the fair value? 95. Answer is correct. If Bangalore market is what? Principal market, then then answer is 114, correct. But if both means, if we are not able to identify what principal market, first we need to identify what most advantageous market. So to find out most advantageous price, we should deduct what both. So first, can you give me what is the most advantageous price? This is 88. This is how much? 116. So what? 106. So which is most advantageous price? 106. So what is the fair value? Then fair value is what? 114. Very good. So this type of one question can be asked either in MCQ or it can be asked for 5 marks also. Then you should write down entire thing. Transaction cost you can read, transportation cost you can read. Now market participant means what? What is the meaning of market participant? Market participant means buyer or seller. Buyer or seller in the principle of most advantageous market for assets and liability. For the assets and liability which you are going to transfer, So this market participant must be independent, must be knowledgeable, must be able or willing to enter into transaction, must be free from any stress. These are the characteristics of market participant. Now valuation technique. So what IND AS 113 says that to find out fair value, you can use any valuation technique, but that valuation technique should maximize observable information and minimize unobservable information. So we should maximize what? Observable input. Minimize what? Unobservable input. Observable information means which are directly available from the market. Which is directly available from the market. For example, quoted market price, that become direct information from the market. Whenever direct information we can't identify, then we can use unobservable information to find out what? The market price. Means these are nothing but some estimated amount which we gather from the market based on the available information, that become unobservable information. Or we can say that this is direct information, this is indirect information. This become direct information, this become indirect information. So we should maximize what? Observable information. We should minimize what? Unobservable information. Now based on this, there are 3 types of valuation technique. One is known as market approach, one is known as cost approach, one is known as income approach. Cost approach is not applicable because can I say cost approach means which price? Entry or exit? Entry price. Therefore it is not acceptable. So either we'll use what? Or we'll use what? Income approach. Market approach means direct market price, means quoted market price. Quoted market price, either adjusted or unadjusted. What is adjusted, what is unadjusted, I will explain. But it can be either adjusted market price or unadjusted market price. Income approach means what? Converting future value into present value. Converting future value into present value means nothing but discounting technique. So they have given 2 models for that. Either we'll use present value technique or we'll use option pricing model. Option pricing model means binomial pricing model or black and Scholes model, whatever you have done in AFM. So that type of question, so they will never ask in FR because we will die. Correct now? And you teach that now, so I will not teach that. Present value, because we see our expert in what? Present value. So they can ask this type of question in what? FR also. So I also know, you also know, so I can teach, you can learn. Correct now? So present value can be asked in exam. So normally they will ask this type of question in exam. This type of question in exam. Chalega? If they are asking this question, it means you should have knowledge about what? AFM. You can't say it is out of syllabus because already you have done where? And both are in group 1. Now for this purpose they have given some hierarchy which is important for theory as well as MCQ question. There are some hierarchy. So first we should use level 1 input. Input means information. Input means what? Information. Level 1 input, then level 2 input, then level 3 input. Level 1 input means what? Quoted price which is unadjusted. Quoted price which is unadjusted in an active market. In an active market for identical asset or liability or measurement date. You need to just see the words because they will say level 1 input. They will give 3 options. So this option is correct. So unadjusted quoted market price. Unadjusted quoted market price in an active market for identical, not similar, identical assets and liabilities become level 1 input. Means suppose you have Reliance Industries shares, you will go to stock market, active market, whatever price, any adjustment is required? No adjustment required. Become unadjusted market price. So simple, only direct information, observable information. Level 2 input is what? Whenever this information cannot be used, correct, then we'll do some adjustment in the market price. For that, what we'll do? We'll take the quoted price of similar asset or liability in an active market. Similar asset and liability in an active market. Understood? Similar means identical means what? It is exactly the same. Similar means not exactly the same. It is the similar version. Means when I am saying, suppose if I am saying Reliance Industry Limited, and you suppose for that market price is not available because the shares are not listed. So you need to find out similar company having the same features, same business in that industry. Then find out the market price of that company and do some adjustment. Do some adjustment. I think this type of question you have done in AFM. I don't know. AFM syllabus, I don't know. You have this type of. Now, there is one method known as comparable method. You don't have? Huh? DT means tax. So I don't know only. Tax क्यों पढ़ा रहे हो? In AFM you don't do comparable company method. अरे IDT छोड़ना, तो IDT तो ना पढ़ा रहा हूँ मैं. IDT में होगा, but just try to understand. In AFM you don't do. When we compare one company with other company, I don't know the name of the topic. When you compare one company with other company, that is nothing but comparable method. Means to find out the value of equity shares of one company, so we will compare with other company. Unlisted company only, because unlisted company you don't have market price na. So suppose you have an unlisted company, so how to find out the value of that equity share? We will compare with what? Similar company. You will find out P ratio, etc., etc., etc. That is nothing but comparable method. So what I am saying that this type of question can be asked. They will give you some information about what? Similar company. Based on that information, you need to find out what? The fair value of the given company. Chalega? Or quoted price of similar or identical as would have in an inactive market. Inactive market. So first is what? Quoted price of similar asset liability in an active market. If that is not available, then take the quoted price of similar or identical asset liability in an inactive market. Under the keyword. What do you mean by inactive market? Very good. Inactive market is there, but transactions are very less. Transactions are very less. Are very less transactions. For example, for me there are two markets for my recorded classes because I have only English version of classes. So South India is one market, North India is one market. North India have students but limited sales because they want what? Classes in Hindi. So because they want classes in Hindi, so I have student there but limited market, limited student. That become, for me it become inactive market. For me active market is what? South India. So if I want to find out the fair value of FR, I will go to South India market or North India market? South India market. And I have just given one example. Have you understood this point? Correct? Got this point? Then level 3 input means what? Whenever you do not have directly observable information, then you will take the help of unobservable information. Means income approach. Income approach means two techniques, either present value technique or option pricing model. Option pricing model. Done. Correct. This one, this you can read. Then this applying fair value rules of a non-financial asset. Non-financial asset means what? What do you mean by non-financial asset? Means PP, etc. PP, inventory, intangible asset. So how to find out a fair value of non-financial asset? So what they are saying, for any non-financial asset, you should find out the highest and best use. Highest and best use means what is the best use of that non-financial asset. So entity's current use may or may not be the highest and best use. Entity's current use may or may not be the highest and best use. Now highest and best, whenever you are identifying the highest and best use, you need to think about three possibility. Means whatever transaction you are taking, that must be physically possible, or legally permissible. It must be legally permissible, or it must be financially feasible. So this highest and best use of non-financial asset should be taken into consideration, should take into the following account into consideration. This become important for MCQ question. Physically possible, legally financially feasible. So then you can find out highest and best use, and based on that highest and best use you will find out the fair value. But suppose if the highest and best use cannot be determined, then entity's current use will be presumed to be the highest and best use. Chalega? Done. Chapter over. This is not so important. You can read and you can understand. Understood what I am saying? Now in this only I like to take one question which is given in ICAI study but not yet asked in exam. So from my point of view this may be important, and in this normally student will do one mistake. This question has not been. No. Impossible. Which exam you give me? Not yet asked in exam. चलो ठीक है. Okay. Concentrate. ठीक है. Not yet asked in exam. चल देख बताओ. Open. ना first you say. You are busy mobile ना. आ गया. Open. चल. She is searching. Let us do it. So in this question, I will say this is a very good question, which is from my point of view not yet asked in exam. From my point of view not yet asked in exam. Quite possible may also come. I may be sleeping in that exam. So on 1st Jan 2001, A Limited assumed decommissioning liability in a business combination. So we need to value the liability in this case. The reporting entity is legally required to dismantle and remove an offshore oil platform at the end of its useful life, which is estimated to be 10 years. The following information relevant. Why I am doing this question? I just want to inform you the entire fair value is based on the question only. Means you need to understand the question and apply that question in your solution and calculate the fair value. So if A Limited was contractually allowed to transfer its decommissioning liability to a market participant, it concluded that market participant would use all the following input, probably the weighted as appropriate when estimating the price it would expect to receive. Okay sir. Labor cost. Labor costs are developed based on the current marketplace wages, adjusted for the expectation of future wages increase, required to hire contractors to dismantle and remove the offshore oil platform. A Limited assigned probability to range of cash flow estimate as follows. So they have given some cash flow estimate. They have given already the estimated amount. They have given the probability. We can find out this probability. Can you do this? So how much it is coming? 130 point. Okay, very good. Then allocation of overhead cost assigned at 80% of level cost. The 80% labor cost how much? 80% how much? 105. Then they have given the compensation that a market participant would require for undertaking the activity and for assuming the risk associated with the obligation to dismantle and remove the asset. Such compensation include both the following: profit on labor cost and overhead cost. A profit markup of 20% is consistent with the rate that the market participant would require as compensation for undertaking the activity. The risk that actual cash outflow might differ from expected, excluding inflation, A Limited estimated amount of that premium to be 5% of the expected cash outflow. The expected cash flow or the real cash flow or the cash flow in terms of monetary value today. So they have given 5% we need to add for the risk. Means for the risk uncertainties, there may be some risk that the actual outcome may be different from estimated outcome. We need to add some risk premium. So that is a premium we need to add. Effect of inflation on the estimated cost and profit. A Limited assume the rate of inflation is 4% over 10-year period based on the available market data. So they have given what? Inflation rate also they have given. Correct. Now only point is what where you can do mistake, that first we need to apply 1, then 2 or this 3, means in which order will apply this. Understood what I am saying? If first we should add profit, ki add risk, ki add inflation. Only here you can do mistake. Is I am doing this question only from this point of view. Have you understood the question? Once you have understood the 1, 2, 3, the balance point is very easy. Are you able to understand? So first we should add profit, we should add risk, profit. So चलो profit calculate कर लो. 131.5, sorry, 131.25 plus 105. How much? 236.25 plus 20%. Plus 20% 67.25. So plus equal to कितना आया? 288.50. 83.50. Now, so this is correct. First we should add profit because we want cash flow. First cash flow. Now there is a risk and inflation, but the first you will add risk की inflation. First add risk or inflation. यहीं भी गलती कर रहे हो. You are adding in this order ना? हाँ? यहीं पे mistake है. Just try to understand. Risk will be on estimated versus actual. So first to estimate based on inflation ना? Then risk will come. So risk means what? The actual will be different from estimation. So first estimate, then apply risk. First estimate, then apply risk. Understood? So first inflation, then risk. Are you getting what I am saying? First inflation, then risk. Understood? Correct. Now inflation is what? 4% over the means next 10 years. It means it will increase by 1.04, 1.04, 1.04 like this. So that you can do means multiplied by 1.04 to the power 10. How much it is coming, batao? 1.04 to the power 10. How much? Means 10 times multiply. $436.44. Then add what? 5% risk. For 58.23. So this become your answer before discounting. 458.23. Let's see. What you have done? 283.50 आया था. Then add 1.04 to the power 10. This is coming. Your answer is not correct then. 4 point. This is correct now. Avoid calculation mistake. Huh? Then add 5%. Add 5% is coming how much? 440. Then discounting. Now discounting rate is given what? Time value of money risk free rate is how much? 5%. And they have done some risk adjustment 3.5. 5%. So your discount rate become 8.5%. Always we know that discount rate will be after adding this factor. So your 8.5%, the present value will calculate for 10 years at 8.5%. This will be your answer, and this will be the expected present value, means this will be the value of DRSL, decommissioning liability. So only in this I am saying that same to same question will come, but most of the student will do mistake. After profit they will add risk, but after profit first add inflation, then add what? Risk. Understood? This question came in exam. मेरा ब्रेड बटर है रे. Understood? Okay. So this is not yet asked. I know which question they will ask. Which question they will ask, that also I know. ठीक है ना? बता तो दिया, आने की चांसेस है. बोला तो. It will come because this type of question. What normally what happens ki they will give some question in RTP. If that is repeated in one or more two RTP, na, so that is higher probability that this type of question come. So it is already given in a RTP and one time in MTP, I think so. So can be asked in exam. Can be asked in exam. ठीक है? चलो. This already I have said about the Mumbai market, Kolkata market. Already I have said. So IND AS 113 is completed. Now I'll come to chapter number 1. Only one point I will teach. Balance you do by your own. It does not mean I don't know this chapter. But क्या पढ़ाना है इसमें? Full theoretical chapter, but there is one concept of capital and capital maintenance. From this a practical question can be asked. Practical question can be asked. I will do that question only. So what they want to say? There are two ways of maintaining capital. One is known as financial concept. One is known as physical concept. Financial concept and physical concept. I'll just give you thoda sa brief knowledge about this, what they want to say. Then I'll come to from exam point of view. What will be the requirement of that question? So financial capital means what? Suppose you invested 10,000 in the business. Correct? And your closing capital after 5 years is 20,000. So what is your retained profit? 10,000. So this is known as financial profit. This is known as financial profit. Correct. But what is the physical profit? What they want to say? If suppose you invested 10,000. Now if you would have not done if you have not done business, the value of money would have increased. Value of money would have increased. Suppose at the rate of 10%, मान लो for 5 years, how much it will come? 10% at the rate of 10% for 5 years. $16,105. So can you say without doing business, also your net asset would have been how much? Means your capital invested would be how much? Without doing any business. Now your closing capital is 20,000. Means based on your performance, your profit is how much? So your profit, physical profit is only 20,000 minus what? 16,105. I hope you have understood. So your profit is only 3895. So this is known as financial profit. This is known as what? Physical profit. Understood? Correct? Now, your financial profit is calculated in two ways. One is known as financial profit based on historical cost, and second is known as financial profit based on current cost. So I need to explain what is this two from one question, and then how to calculate physical profit. How to calculate physical profit totally based on exam question. Only one question we have, so I will take that question only. I hope you have done this type of question. No? Have you done this question? Not done. You might have done, but you don't practice. Normally what happens, these questions are more dangerous. This chapter are more dangerous. because they will ask this question. It will be 5 marks, and if you have not done revision, you can't do it. So I will say revise smartly. There are some questions to identify as MRQ. Just revise before exam. There is no need to do multiple revisions for that. Multiple revision not required, but you know this question can be asked. Just do it now. Got this point? So this all small question, if you can revise, then your exam question will become easy. So I will take that question bank. That question only. Yeah. Concept you have understood? Now this is the question. That question will be asked in exam. Already asked in exam. One of the exam it has been asked for 5 marks. 5 marks is important, not important. Now whenever this type of questions come, I say gaya. Because I know student will not revise. You know there is one chapter IND AS 108 and there is one segment reporting. Super easy or not? But then also ICAI has asked 4 times in exam. So students are not able to write down. Students don't revise. If you don't revise, you'll forget. You'll not be able to write. One mistake, they will not give marks. मांग लो जितना मांगना है. So normally what happens, we don't revise that type of chapter. IND AS 108, IND AS 105, IND AS 30, IND AS 10 कौन revise करता है? IND AS 2 तो you will not see also. IND AS 2 you revise. देखो no. And they will ask 5 marks question from there. Now if you have not revised, you will not try to attempt also. You will not try to attempt also, because in final level they will not ask inter level question na. In final level they will ask final level question. For that also practice required or not? अरे बोलना नहीं. Normally what happens, मैं आपको बताता हूँ. Normally what happens, why student struggle in exam hall? थोड़ा समझो, बात को समझो. Normally everyone knows 60 marks from that 5 chapter. Which 5 chapter? नाम बताओ. हाँ बताओ. One will say. हाँ बताओ क्या ना दर्द होता है पूरा नाम लेने में. FI दर्द हो रहा है ना. FI बोला, FI लिख दिया. उसके बाद CFS, देन तो एक हो गया बिजनेस कॉम्बिनेशन. देन 116 भी छोड़ो, 115. देन शेयर बेस्ड पेमेंट, एनालिसिस ऑफ फाइनेंशियल स्टेटमेंट. एंड लिख लो 116 भी लिख लो, क्योंकि नॉर्मली पूछ रहा है. लिख लो, लिखने में क्या. दिस विल कवर 60 to 7, मतलब 60% तो पक्का. एवरीवन नोज. I also know, you also know, every student know. Those who are writing for the first time, they also know. But 60% यहाँ पर भी तो है. Yes or no? 120 marks paper होता है. The last 4-5 days, everyone focus on this, and no one focus on this. But it's wrong question. No one. Most of the students do not focus on this, or they will revise in such a way that at the end of the day will have no time to revise these small chapters. Just try to understand. Your target is 50%, not 60 out of 60. If you are thinking that अभी student was talking with me, sir पहले बड़ा chapter कर लेते हैं. Let us have that grip. I said, why you not started with India 16? My first question as a teacher, because I know that rhythm will not come. You are starting with consolidation. Revision you are starting with consolidation. You will stuck in between, because heavy chapter started mentality socho. You started with one big chapter, and suppose you are not able to understand that chapter, moral down. Surrender. You surrender. Am I right or not? After 1 year, if you are starting a consolidation chapter, so ठीक है, you think it is easy, but it's not easy from student point of view. Start with this. IND AS 2, your confidence will increase. Yes, I am understanding. IND AS 37, yes, I am understanding. So just try to understand what I want to say. If you are giving 3 days to this, you should give 3 days to this also. यहाँ पर mismanagement होता है. Mismanagement is this. Because equal weightage na. Weightage is equal. That you need to understand. If you are saying, sir, I want 150 hours for this. So you want 150 hours for this also. Because this is small but large in volume. And if you are saying, sir, I can do this in 5 days and 1 day में इसको कर लेते हैं तो कर लो. And normally what happen, out of the 60 you will be able to score 20, and if you are not able to not have performed this तो गया ना, aggregate खत्म. And one question, अगर big question you are not able to do it, or that question is थोड़ा सा अटपटा, then this will only save you. This 60 marks will save you. This 113, if suppose they ask, so it will be simple now. Do it in days one. If one question they will ask, that will be simple. But for that you need to revise. Correct? So once again, give equal importance to all these categories. And there is no ABC category. When I say ABC category, my meaning is what? ABC category means what? Just try to understand. ABC does not mean don't revise this. ABC means what? Just try to understand. This chapter you can revise quickly. Quickly. So what I want to say, C category, whenever I think these are the C category, it means even though you have not done the question, but if you know the content you can write. So in this less practice, but revision to require in days 2, in days 37, revision of content is required. Abhi onerous contract you have forgotten. What is onerous contract? Suppose you have forgotten and they have given one good question of 8 marks of onerous contract. Will you be able to write? Will you be able to write? You know the answer, but you will not be able to write it. Are you getting what I am saying? So if you revise the content, then only you can write it. So focus on that also. Okay? Chalo. Now let us come to this. The last question of the day. Mr. Unique commence business. Right on MRQ also, this type of all questions should be revised again. On 1/4/2017 with 20,000 represented by 5,000 units of the product at 4 per unit. Means they invested how much? They purchased how much units? At rupees 4. Means entire invested. During the year 17-18, they sold how much? Means how much sale? 25,000. So what is the profit? 5,000 is the profit. During the year he withdraw how much? So how much remain? So what is the closing capital? 21,000 is the closing capital because opening was how much? This become closing capital. Then they have given 31st March 2018, price of the product become 4.6. So initially it was how much? 4. Now it become 4.6. Average price indices, this is nothing but consumer price index. Initially it was 100, now it become 120. Find out financial capital maintenance at historical cost. At historical cost. So historical cost very easy. But what is the closing capital? 21,000. Now opening capital at historical cost. So opening capital means what is the capital to maintain based on historical cost. So this will be opening capital plus additional capital brought in. Opening capital plus additional capital brought in, because in this question there was no additional capital brought in, so that will be 0. So opening capital historical cost 20,000, this become retained profit. This become financial profit under financial capital maintenance at historical cost. This is very simple, you got 2 marks. No, 1 mark. Then financial capital maintenance current purchasing power. Current purchasing power. Understood? So it means what? 21,000. Now current purchasing means you need to find out at as per what? As per what? CPI. As per CPI, current purchasing power. So batao, 20,000 into what you will do? Into 120 divided by 100. How much it is coming? 24,000. 24,000. So your retained profit become negative. Means as per CPI, actually there is a negative retained profit. As per current purchasing power, you have withdrawn more than the profit done. So that is not good from business point of view. That is not good from business point of view. That is negative retained profit. Understood? Now coming to physical capital maintenance. So physical capital maintenance means you need to use the current cost of that product. In this I am not okay. Means from my point of view it should be 21,000 only. But I'll go as per the institute solution because ICAI has initially given 21,000. Then in some addition, after some addition, they changed it to 91,000. I'm not okay with this. From my point of view, it should be 21,000 only. But we'll go about with what? ICAI solution. So what they have done? They have recalculated closing capital. They have recalculated closing capital by applying what? Key. It become 4.6. So 5,000 into 4.6, how much? uh, 23,000, and minus what? Withdrawn how much? 4,000. So closing capital become how much? 19,000. I don't understand what is the logic behind this. Your closing capital will remain closing capital. We can't change the, suppose just right on 31st March we have a closing capital 21,000. So at current market price it is 21,000 only now. Not able to understand. Not able to understand. Means you invested what? 20,000, and now it become what? 20. So you need to bring this at this price now. Why you are changing this? 21,000 will remain 21,000. The value of capital is not going to change as on current date. The value of capital is not going to change as of current date, as per my understanding. If I am wrong, you can correct it after my class. So from my point of view, it is 21,000 but not low. Because they have changed the solution. They have changed the solution. I have no logic behind this. So what they have done? 5,000 into 4.6 minus what? 4,000. Logic nahi pata. And then they have calculated opening capital based on what? Current cost. That is nothing but 5,000 into what? 4.6. That is the logic. Logic समझ में आ रहा है? ऐसे हो रहा ना, eyebrow उठ रहा है ना, eyebrow उठाओ, ठीक है ना? It become negative 4,000. So I am going as per ICAI solution because they have changed the solution in some recent edition. चलेगा? So 19,000 minus 23,000, it become retained profit 4,000 negative profit. This you need to थोड़ा सा revise and go. This become what? Physical capital maintenance. Same to same question will come with MCQ also. They can ask financial capital profit under historical cost, financial capital maintenance profit as per current purchasing power, or physical capital maintenance. Understood? With this chapter number 1, balance point you do, I have done only one concept. Okay. The next class, all the big chapters done. With business combination, all the big chapters has been done. So next class, what are the topic? Just write down. It is IND AS 21, IND AS 7, IND AS 19, IND AS 8, IND AS 1, IND AS 108. All the small chapters are there. Understood? Only IND AS 19 थोड़ा time लेगा. Otherwise, all are small. Okay? IND AS 21, IND AS 7, IND AS 8, IND AS 1, IND AS 19, IND AS 108. Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day.